Sharbani, are you there?
Yes, good afternoon. Can you hear me?
Yeah, good afternoon. Yeah, I can hear you. Am I audible?
Yeah, you are audible.
Audible. No? Okay. Okay, we'll start in 5 minutes.
Yeah, we can start in 5 minutes. We have the department, income people from income tax department. They have also joined. They have already joined. Additional Commissioner, Mr. Shoiren Shamadar and Mr. Manush Mondal.
Mr. Shamadar and Mr. Mondo.
You connected? You connected? Why you are not connected?
Okay, I think they are on mute and start in 5 minutes.
Okay.
फोन पे यूपीआई में हो जाएगा।
Good afternoon. We welcome you all to our today's webinar on direct and indirect taxes. We have with us the department. We will share departmental perspectives as well as industry perspectives on GST and direct taxes and the recent updates. I now request Mr. Vivek Jalan, who is the chairperson of the Fiscal Affairs Committee, including direct taxes of the Bengal Chamber of Commerce and Industry, and partner Tax Connect Advisory Services, to deliver the welcome address and take the session forward. I would also request the participants, please mute yourselves and switch off the video. Whenever there is any question, you can raise your hands or you can utilize the chat box. The speakers will take the questions appropriately. So request all the participants before proceeding, please turn off your video and please mute yourselves. Over to you, Mr. Jalan, please.
Thank you, Sharwani. And I think the host can please mute everybody once.
Okay.
Yeah. Thank you, Sharbani, and thank you to Bengal Chamber of Commerce and Industry for organizing this webinar on direct taxes as well as indirect taxes. Welcome to the Income Tax Departmental Officers, Shri Shailene Shamadar, Additional Commissioner, and Mr. Manas Mondol, Additional Commissioner, to this webcast. Thanks to all the participants for joining in large numbers. And since we have a large gathering here, more participants are expected to join shortly. As Sharbani has requested, all are requested to kindly keep themselves on mute with their videos switched off. And in case you have any queries during the session, you can please enter it in the chat box and address the corresponding speakers, and we would try to answer them as much as possible at the end of the webinar or in parts as and when the respective sessions end, subject to the availability of time. Friends, there have been a lot of developments in taxation, and as we speak today itself, we have got an SOP on faceless assessments under income tax. It is a 55-page document detailing a lot of things. Yesterday evening, late night, I suppose, we have got 3 important circulars on GST. Apropos the decisions taken by the GST Council meeting. Many a times developments in income tax or direct taxes impact indirect taxes. Developments in indirect taxes impact direct taxes. And there is an interplay of GST as well as income tax, or even customs and GST and income tax. Corporates today are looking at tax managers who can handle not only GST or customs, but also income tax and vice versa. In income tax, we have seen that TDS has become a area of practice in itself. It has become so vast, and there is a TDS by and large on all the transactions of goods, services, and now the new TDS sections of 194R on benefits or perquisites requires some doing for implementation of the same as per the CBDT guidelines. So we thought that the time is appropriate that we have a combined webinar on income tax as well as GST, and sometimes interplay of both. You have seen so many developments in GST. The return filing in GST has been almost revamped by means of a circular, which means that the amendments were already there. We have a lot of speakers here who will speak on technical matters, and we are thankful to the income tax department who have also joined to address the gathering on the departmental perspective. The GST departments, both center CGST department as well as the state GST department officers, would be here in the second half on GST, and we would take up very critical topics on assessment procedures, etc. So welcome to all again, and since time is limited, we would start immediately, and I would request the additional commissioner of income tax, Mr. Shailen Shamaddar and Mr. Manas Mondol, to kindly address the gathering.
Can you please start our video, admin?
Okay. Please accept.
Good afternoon, everybody. Mr. Jalan has already introduced us, and he has said about different provisions that has recently come in income tax and of course in GST. But today we shall confine our discussion regarding the newly introduced section 194R, which has become effective via the Finance Act 2022, effective from 1st of July 2022. So let me just share a small screen with you regarding giving the overview of section 194R. Then Mr. Shailen Shamaddar, he will be taking the session. Please allow me to share my screen, host.
Okay. Permission given.
Now, host disabled.
No. I've made you co-host. You can share.
Okay, let's see.
You check share screen. You have given the permission.
Okay, 1 minute, please.
Okay, we can see your screen.
Okay, so we are straightway coming to the provisions of section 194R. See, as I have already said, this has been introduced in the Finance Bill 2022. The salient feature is that it is to bring the freebies that is provided in the nature of benefits or perquisites out of business or profession. Those whoever are in the business, as you are all members of Chamber of Commerce, so you are all doing business or might be in profession also. Mr. Jalan may be having both business and profession. Anyway, for business, the limit is above 1 crore, and in case of profession, if it exceeds 50 lakhs, then if you just provide any perquisite, which in the whole year is more than 20,000 rupees, then you need to deduct TDS at the rate of 10% at least. And if the person to whom you are paying doesn't have any PAN, it may be up to 20%. For this, I would request you to go through the provisions of 206AA and AB. Moreover, we find that sometimes the freebies are given in the form of gifts, like one may give you a car also. In that case, or it may be a combination of cash and kind. And if the cash portion is not sufficient to meet that TDS liability, then the payee, that is to whom it is being paid, he has to pay the balance in the form of advance tax. In 26QB form, this provision has been made from this year. Secondly, one small thing, that is, while giving this freebies, that is the gift or perquisite, you have to consider the market value of the goods that is given, not your manufacturing cost or any other cost. Please remember, or your purchase cost. It has to be the fair market value. So up to this, after this rather, I would hand over the screen to Mr. Shailen Samadar for further discussion. Thank you.
Thank you to my colleague, Mr. Manas Mandal, for sharing his experience and views. Good afternoon to all the attendees. 194R is not new to, I think, the business communities, but there are a lot of nitty-gritties, pros and cons are there, and people are thinking, and there are a lot of queries we are receiving regularly. I want to extend this thing, and I would like you take back the background of 194R. Though 194R is a new provision, and you may think that it is applicable right now, but I have a little different view here also. It was there in a different form, whether you would agree or not. As today's session is what was the departmental perspective, from that angle, as an income tax authority on behalf of government, I want to take you straight 194H. That is the section. If you you may note it also, there is one clause, that clause 4. I am taking the help of the Income Tax Act because what is my view would not be applicable to everybody. But what was the act? Definitely, it has to be agreed with that view. Just I am reading for the sake of all the members who are connected here, or who are experts there, they may also review this. There was one clause under explanation to section 194H. What is written here? Where any income is credited to any account, whether called suspense account or by any other name in the books of accounts of the person liable to pay such income. That means any income is credited by anyone, whether called suspense account or by any other name, by any way of mode, in the books of accounts of the person liable to pay such income. The person who wants to pay such income, such crediting shall be deemed to be the credit of such income to the account of the payee. And the provision of this section shall apply accordingly. If there is any ambiguity, if I have to read again, kindly advise me, I will go accordingly. Now, with this context, I want to move that it gives us enormous power to the department to catch hold of those things. What was now written in 194 or rewritten in 194R, and it is extended, it is exclusively or specifically mentioned here, because it covers everything under section 194H, which is headed a commission or brokerage. Commission or brokerage, here it is written there clearly. And from here, I am coming to section 228(4) of Income Tax Act. It comes under the source of income headed as business or profession. What is written there, which gives us, which is the integrated part of the 194R. Why 194R is invited? That is because of 28(4). 28(4), there was ambiguity because there are a lot of things. What is written in 28(4)? It is written, the following income shall be chargeable to income tax under the head profits and gains of business or profession. And what was there on clause 4? I am going straight to the clause 4. There are many clauses, 1, 2, 3, and 4, and a lot of clauses. The value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of a profession. The value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of a profession, that was the source of 194R. That was the basis. If anyone has been doing the business with any other person, and for the sake of business, for the increase the volume of the business, for expansion of the business, if anyone is providing any gifts or any benefit or any kind of amenities to other person who has been taking the responsibility to extend the business, and to that benefit will be considered as income, and 194R will be applicable there. Now I am coming back straight to the definition of the income. What is written here? Here the clause 5D of subsection 24 to the section 2, or in short, if we mention it is a section 224 5D. Here it is clearly written, the value of any, the income includes the value of any benefit or perquisite taxable under clause 4 of section 28 of IT Act 1961. That means the definition of income covers 28(4) since long back. The section 28(4) was not a new section. It was there. It covers the definition of income. Now again, I am coming back to the 194H clause 4, which I have already mentioned earlier, the first starting of my lecture, that where any income is credited to any account, whether called suspend account or by other income, in the books of account of the person liable to pay such income, such crediting shall be deemed to be credit of such income to the account of the payee, and then provisions of section shall apply accordingly. That means any benefit which was passed on under section, covered under section 28(4), which is newly rewritten under in the form of 194R, where TDS liability has been fixed newly, was already covered to a large extent under the provision of clause 4, under the clause, as per clause 4 to the explanation of section 194H of IT Act 1961. However, with this background, now I am coming to the 194R. What is there? It was not the fact, it was now today you have to take care. For 194R, yes, you have to prepare for, it is effective from 1/7/2022. Now I am coming to the what was the written exactly in the act and what are the messages given through 194R. Now from 194H, I am shifting totally to 194R and I am reading the exact, it is in brief, what is written there. Any person responsible for providing to a resident, that means the payee must be resident. And regarding the payer, it is not mentioned whether it is a resident or non-resident. Any benefit or perquisite, whether convertible into money or not. Just you think about 24, clause 24, clause 4 to money or not, arising from business or the exercise of a profession by such resident shall, before providing such benefit or perquisite as the case may be to such resident, ensure that tax has been deducted in respect of such benefit or perquisite at the rate of 10%, what is already told by my colleague. That means when you are passing any benefit only because of business, if business is not there, suppose the director of the company, in that case, director is an employee of the company, naturally, his the benefit passed on to him should be covered under the perquisite, but not that perquisite under the salary, not the perquisite or benefits under the business or profession. So here, limitation or the condition is there must be the business. There must be business, the payer and payee, both should be involved in the business transaction. Then there is one provision. It was written that provided that in a case where the benefit or perquisite, as the case may be, is wholly in kind or partially in cash. It may be happened. You are also aware as a businessman, and it is a rampant in the trading industry or in the entire business area. A portion may be given in cash, a portion may be given in kind also. In that case, what will be happened, how the taxes will be, or the TDS will be made if the cash is not sufficient. In that case, whatever the benefit passed on to the payee or the purchaser, in that case, how it will be paid. It is written clearly here, it is mentioned, is provided that in a case where the benefit or perquisite, as the case may be, is wholly in kind or partly in cash and partly in kind, but such part in cash is not sufficient to meet the liability of deduction of tax. In respect of whole of such benefit or perquisite, the person responsible for providing such benefit or perquisite shall, before releasing the benefit or perquisite, ensure that tax required to be deducted has been paid in respect of the benefit or perquisite. That means if the benefit in the form of cash part, where the benefit has been passed on or provided partially in kind, partially in cash, and cash is not sufficient, in that case, the payer should ensure that the tax has been deducted properly and the complete deducted tax has already been deposited at the time of providing the benefit to his counterpart. Another proviso is there, and there is some other condition has been laid down here. Provided further that the provision of this section shall not apply in a case resident where the value, if it is not exceeding, the benefit has not been exceeding during the whole year, it is not partially, the sum of total benefit has not been exceeding rupees 20,000. In that case, there should not be any TDS under section 194. And another condition regarding sales and turnover, individual and in the case of HUF, where the turnover professional and business, it is already mentioned by my counterpart and colleague Manas Mandal sir, and that's why I am not going on that on this issue. And in this context, I want to highlight some cases I have prepared, and I have taken some example of that. Like sponsorship, sponsors a trip upon achieving target or particular business target, whether it will be covered under section 194R or not. It will be covered if any sponsorship is made by your supplier or your manufacturer. As a trader, you are receiving for purchasing good and you have been given some target, and now after achieving it, he has sponsored, or the manufacturer company has a sponsored. In that case, that will be covered under section 194R. Simultaneously, if free ticket has been provided for the trip, also be covered, even if it is provided to your relatives or your family members as a part and parcel of achieving business target. In that case also, it will be covered under section 194R. Like dealer conference expenses attributable to leisure trip and leisure component, even if it is incidental to the dealer business conference, expenditure incurred for family members as well as that particular trader or businessman or dealer will be covered under section 194R. If there is any query of if anyone has any doubt up to this, in that case you may raise the query, or I am ready to answer. We are here to answer, because that time limitation is there.
194R is applicable if cash gift is given.
Yes, obviously.
Provided it is above 20,000 rupees.
Yes. There was a chat box. There are some queries whether 194R is applicable if cash gift is given. Yes, it is completely applicable, but provided there must be the preconditions are there. There must be some business. It should be arises because of business transaction only, and the entire amount for the whole year should be exceeded rupees 20,000. Here there is one one clause is there. Suppose any amount has been paid before 1st July, in that case, what will be happen? It is especially for this year, current year only. In that case, you have to consider that amount also if exceeded. But if it does not exceed, in that case, you need not deduct any amount under section 194R. And another query is there, whether section 194R is applicable on expenses incurred for CSR activities. I think CSR activities is company's own activities. Through these activities, the company
Providing any benefit.
is not benefit to anyone, which arises, which the recipient may not be benefited because of doing the business, because it is the prerogative of the company where they will apply it within the framework of law. What are the special provisions are laid down there? But it is not exclusively the business transaction. Hence, it should not come under the purview of 194R.
Right.
Sir, here one point I feel what the queryist has is, although CSR is a statutory liability, yet to whom CSR activity is done, like for example, you go to a particular orphanage and donate clothes, then it is a CSR and you get 80G deduction, but it still remains a benefit to the person who receives it.
But you do not have any business relation with him. Business has to be established. You don't have any business relation with him, thus it doesn't attract 194R.
Okay.
Just in this context, I want to give one example, like doctors. Freebies are normally given, samples are given. Suppose doctors are consultant of any particular hospital. In that case, it will be treated, if it will be in that case, suppose it's a consultant, in that case, it will 194 will be attracted. Suppose any doctor is employed with any particular hospital other than government hospital. In that case, hospital will be treated as a business entity, and then hospital will pass on it to the doctor by covering under section 17(2) as a perquisite. So like that, here orphanage, as you were telling, suppose anyone is giving the benefit, yes, that is a benefit, but neither with that particular institution nor the recipient. Anyone has any business relation with the person who has been paying it or who has been donating it or who has been doing the CSR activities. Hence 194R will not attract. Another question is, am I clear, or is there any clarification is required? Shall I proceed?
You can proceed, sir.
Yes, thank you. We are in cement, there are another query. We are in the cement manufacturing business. We used to give a coupon, token, or whatever name you call it, marking some amount on it in INR like rupees 5, 10, 15, so on, which will be inside the cement bag, and anyone with this coupon or token can claim the cash from our company as marked or written on that coupon. Kindly advise in respect of applicable TDS. Here I would like to mention, you are giving the benefit not within your invoice. You are giving the benefit outside the invoice. It is not a continuous process. You are putting it inside the cement bag. Naturally, if the quantum to a particular recipient or your dealer exceeds rupees 20,000, in that case, definitely 194R will attract. There is no ambiguity about that. Otherwise, I have already mentioned it was there 194H, even that clause 4 of explanation 194H will also cover. Next question I am coming to next. How to calculate TDS under 194R if the receiver does not pay advance tax from Manmeet Singh to it is from not pay advance tax. Query is not
Query is not clear. Mr. Manmeet Sinha, can you please clarify it?
I think the question is.
I think we can go ahead, sir.
We can go ahead.
Move ahead.
Can queries related to payment and return filing be raised now, or it will be taken later? It is a different. It is not TDS related.
These will be taken later.
Okay.
We can go ahead, sir.
Free lunch, transportation and accommodation provided to consultant is attracted under section 194R. Yes. Yes, there is a business relation. Business or profession, it covers under business or profession. If it exceeds, subject to those conditions, if it exceeds rupees 20,000 and other turnover part and whatever maybe, because the person who has been paying it, it depends on who has been providing it or giving this benefit, it depends on that. But it covers. The nomenclature of the benefit covers under 194R. TDS should be there.
Sir, one query from my side. Now, in the CBDT circular, it has been clarified that even on reimbursements, if the bill is in the name of the person who is claiming the reimbursements, then 194R will be applicable. However, if the bill is in the name of the company, then 194R will not be applicable. Now, where there is a business relationship, say a consultant, as a consultant, I go stay in a hotel or have air tickets and give it for reimbursement, then 194R is applicable, fine. But if say an employee of the organization, he goes on a official trip, incurs a hotel expenditure in his own name and then gives it as a reimbursement. As you said that it will may be treated as a perquisite.
Yes.
So if it is treated as a perquisite, then how will the employee get the deduction of that? In business, he can claim a deduction. But if it is treated as a perquisite, how will the employee claim a deduction for that?
See, this is not covered under 194R because employee relation is there. Since employee relation is there, it is not covered under 194R. It may come under 192.
Right, sir.
On this,
so that is my.
I want to highlight there, as an employee, as his income will be charged under the head of the salary, there is a provision. If it is a TDA reimbursement, to rule 2AB is there. According to 2AB, limit is also there. Suppose the transport allowance, it is given to the salaried employee. 800 per month, now it is 1200 per month is allowed for deduction. In this way, in salary section under section 10, under section 10(13), DA reimbursement is exempted. So, subject to, there are some limits which has been mentioned in the another chapter salary, and accordingly he can claim, but to that extent only.
Sir, my question is a little, I want to elaborate a little.
Yes.
The employee goes on a trip for the purpose of his employer. And he spends from his credit card for hotel bill or flight tickets, then claims a reimbursement. Will that come under 192 also, if not under 194R? Because in the CBDT circular, it was clarified that reimbursement, if it is in the if the bill is in the name of the person who is claiming the reimbursement, that would be liable to under 194R.
As he is not connected or he is not related as a business counterpart, here the question does not arise. First, 194R is not attracted. Another part is, now you are asking about the whether it is taxable or not. Is it your query? No.
Yes.
Whether it will be taxed or he will be exempted from that, because the whatever money, suppose he has spent 50,000 rupees. Now it is reimbursed by his employer. It is quite natural, as I have told already, that he is covered under as per the chapter salary only. The salary, what are the provisions are there? You have to deduct that and you are eligible to get it. Under section 10(13) probably, the TA, whatever the TA, there may be two components normally. One is TA, that is a traveling allowance, one is daily allowance. Daily allowance for food and other things. Traveling allowance, it comprises your transportation allowance, airfare and all those things. It will be eligible for deduction, deduction as well as exemption, according to, because it depends upon the status of the employee. What are his DA and all those things, basic, it will be allowed accordingly. But there is a provision. It is not taxable.
Okay, sir.
Thank you. Now I am moving another query. Free office space or workshop provide to contractor for execution their job. Free office space or workshop provide to contractor for execution their job is attracted under section 194R or not. Obviously, when you are contracted for business purpose, for executing your business, naturally you are passing on some benefit to you. Suppose he is liable, that contractor is liable to construct something or to execute some works on behalf of you, your contract. Now, in addition to that contract, now you are giving that office space as well as workshop to him for expedite the work or whatever may be. Naturally, it is a benefit, extra benefit you are providing, it will be covered.
If dealer is rewarded with some benefits for achieving target and settled through credit note, 194 applicable or not?
Yes, it is applicable because credit note is issued separately totally. Credit note is given to you as a reward. It is like a coupon, or it is a kind of check or draft, whatever you may consider, because it has a money value. No, so naturally it is quite obvious, and it arises, credit note arises not because of employer-employee relationship. It arises out of business and profession only. That's why it covers under 194R.
Sir, here one point. Generally, it is in the nature of post-sale or turnover discount. This credit note which Mr. Mukherjee is talking about.
Yes.
So that has been clarified, I suppose, in the circular, that discounts, although it is a benefit, but for removal of hardship, it will not be considered under 194.
Exactly.
That is different from discount.
Exactly. Discount, if it is given in the sale business. Suppose I am giving one example. First, for the first quarter of target, you have achieved it. Naturally, now there will be a question of some benefit or discount as per your scheme. It should be provided. If it is adjusted within the invoice as a part and parcel of continuity of business, that will be considered as rebate. Rebate will not come under the purview 194. But if you allow credit notes separately, it carries the money value. It is a kind of BRR, like a BRR bond. You are giving the value, you are passing it on additionally. You are not adjusting with the, but if it is, suppose you are raising any bill, sometimes it is given. If we go to the college institutes to purchase the books, they allow 20% discount on the books. In that case, 194R will not be attracted. It is a rebate, but rebate is considered only when it is given on the your voucher or invoices only. When you are passing it on separately, in that case, it should attract 194R.
One more question we had: will it be applicable if customer receivable became bad debts?
It is very easy to understand you, Shada. It is because bad debt immediately does not become bad debt, but TDS is instantly. When you are passing it on, you have to do it. Whether what is its nomenclature, what will be the result of whether bad debt or good debt, it is immaterial for him. Because when you are dealing any business transaction, at that time you can't consider bad debt. That's why 194 is applicable.
If dealer is rewarded with some benefits, incentives.
Another question is, if dealer is rewarded with some benefits or incentives for achieving target and settle through own product, 194 are applicable or not? Yes, definitely. But the product has some value, no? Whether it is kind or cash, 194R is applicable. Another question, whether 194R apply on expenses incurred on trials and demonstration on performance of the products. Yes, definitely it is applicable if it is retained by the retained by the recipient. In that case, it is applicable. Now, what are the products? It depends upon that. But just I want to add, but if it is for a learning process and it is consumed immediately, instantly, in that case, it will not cover under 194R at the time of launching of any product or like that, because no one is a beneficiary here.
What is alternative way to pay TDS?
Another question is, what is an alternative way to pay TDS under section 194R if the receiver or purchaser does not pay advance tax in respect of the same?
Small thing, you pay yourself because you have to pay. You pay yourself then.
Now here just I would like to add something, that you don't worry about your TDS, because TDS is nothing. It is not to be taken permanently by the department. It is your money. It will be under the safe custody of the government only. Just government wants to bring all those things under the net of the tax net. That was the issue only. Because the TDS is nothing. It is a only different component of your money, as sometimes you yourself pay or invest in the bank. You keep it in the fixed deposit form, like that only.
194R is applicable on bad debts written off.
Another question similar to earlier one, whether 194R is applicable on bad debts written off. So naturally, bad debts written off, there is no passing of any information, any benefit to that particular person. No, 194R, because you are not passing it on through the books, you are basically, it is waiving it.
Credit note has already been discussed, this issue, credit note to customer for achieving the target.
Yes, it is. It comes under 194R, cover already.
Will the post-sales cash discount given to the buyer?
Another question, will 194R apply even if post-sales cash discount given to the buyer? Now, cash discount, how you are giving the mode, it depends upon the mode. If it is within your invoice and you are allowing in the rebate form or discounted form or truncated form, suppose your invoice, next invoice is 1 lakh rupees. Now you are allowing 10,000 rupees as a discount. In that case, your invoice should be at rupees 90,000 and truncated figure. Naturally, 194R will not attract. Yeah.
Yes, it is nice that you are putting up so many questions. It is very nice. You have a very nice. We have a very nice audience here. Now, some more questions we invite. If you have any doubt, please clear. We will try to clear. Whether benefit.
Another question is there, whether benefits should be direct, means some outflow must be there, or it will also cover indirect benefits like bad debts. Direct means some outflow must be there, or it will also. Bad debt is later on. It is not instant, because TDS, bad debt, just I am giving one example. Suppose you have today allowed any or you have given any money to anyone today. You have to deduct the TDS if applicable instantly only. TDS is nothing. That is a tax deducted at source. It should be done instantly, and a part should be written by you. And bad debt is a later process, and in a circular kind of a circular way it comes back after a long time back. At that time there was no scope of making any TDS. Suppose you are basically you are designating anything or specifying any amount as a bad debt. Now at that time neither you are giving any money or passing any benefit, nothing was there, hence 194 will not attract here.
You please write your questions in the chat box. It's better. The benefits will be done.
Another question is that if the person giving benefit pays TDS under section 194, how will calculate TDS on benefit of rupees 10,000? 10,000 does not attract. If it does not exceed 20,000, in that case 194 will not be attracted. Another is whether apply 194R on combo products and services like giving door delivery. Basically, door delivery, the question is rather cryptic, because if door delivery, that means like a Zomato, Swiggy, the people are coming under door-to-door delivery. Their benefit is not passing. No, basically we are purchasing, they are only providing, and because of their service, they are charging from according to the system prevailing there only. Here, no extra or additional benefit is there. As a buyer or customer, I am paying it for. Staff traveling reimbursement is 194 are applied. No, because when it stops, it becomes employer-employee. There is no business. Staffs are doing, staffs are providing service to you. Another query: if TDS deducted under section 194R, is it necessary for the deductee to disclose the component in their income in the books? Yes, of course. That was the main purpose of the government, to bring all those transactions, whether it is in cash or kind or hidden or whatever may be, under the bracket of tax.
Any more questions, please?
We are ready to hear answer to the best of our knowledge. We don't have problem. If there is any query, please, most welcome. This is an opportunity. It is not a learning or teaching session.
Mandalji, Arshad this side from Tata Steel. Can I ask one query regarding reimbursement only?
Yes.
See, as per the recent circular which has been issued by CBTT, it says that when we are making payment of any reimbursement, okay, and if it is in the name of payer, then section 194R will not be applicable. Correct?
Yes.
And at the same time, in another question, it also says that when suppose I am a company and I am arranging a conference, and I am inviting my distributors or dealers, and there are some criteria is given that the conference is for a specified purpose, then section 194R will not be applicable. Correct?
Yes.
So my query is, suppose I'm arranging a conference, suppose, and I'm inviting my dealers or distributors, okay? And I'm asking them, you arrange for the this thing, hotel arrangement and everything, and get a reimbursement from us, okay? So in that case, if the bills are in our name, will 94R will be applicable, or as per the circular it will not be applicable because the bills are in our name?
No, it is applicable, because you are basically reimbursing it not for launching any product or nothing. It is a conference. Even if it is it is conference for expansion of your business, in that case 194R is applicable.
No,
Plain reading of the law.
No, I am saying ki whatever exception you are given, that if you are arranging if you're launching a particular product or whatever criteria you have given in the circular, then 194R will not be applicable. So
Right.
I will ask my distributor, you arrange the hotel, everything, and raise and take a bill in the name of in the name of our company. Okay. So by plain reading of your circular, then in that case 194R should not be applicable because of your another FAQ on reimbursement of out of pocket expenses, because bills are in our name.
Please be brief, please. Yeah,
No, no, okay.
sir.
Okay, your question is apt.
Sir, this query regarding I have, that's why if you can remember, I have started with under section 194H. It is even if you do not, if you want to reiterate on this present clarification of I think 12 June, no, it is a
16 June.
sorry 16 June circular number 12, that exceptions, even this part will be covered by that. That is the explanation, that clause 4 under explanation to section 194H. That provision is also there. So because it is a 24, it covers under 28.4. You will not disagree with that. Question is now whether 194R is applicable or not. But because it is a kind of benefit. When anyone is you are inviting, definitely he is coming to attend that conference. Now you are basically giving the whatever the reimbursement, that is the cost or benefit passing to you. So naturally it covers under 28.4. Even if it does not come under 194R, it will be covered under 194H. The clause 4 to the under the explanation. So TDS, it is advisable to do the TDS on it.
Right.
Okay.
Sir, I think in the benefit of paucity of time, we take just one last query.
Yes, so there are 2-3 queries are there. Just if you kindly allow us, agree with that part, just let us answer up to the queries received in chat box. Let us
Sure,
answer it speedily.
Sure, sir.
Whether TDS applicable on monthly, quarterly,
Volume discount.
on the volume discount on sale of goods given as credit note. Obviously, when it is a credit note and you are giving it separately, passing it on, definitely the 194R will attract. If last question, if the conference is for business purpose for the dealers, any hotel stay arranged for a day earlier or any facility such as gala dinner after the conference arranged, will such portion attract 100%. 194R will attract in this case. Whether it is a previous stay for the earlier day and it is extended further, because the benefit is ultimately passing to that your counterpart due to business and business activities.
Thank you all for listening patiently to us, and thanks for raising some queries. Maybe some more clarifications will come. There are some doubts still now because this is a new proviso, and once it undergoes time testing, then only we'll be able to proceed further. As of now, we feel that enough clarification. Hello. Clarification has come.
Hello.
If you have any problem in it, you please raise your questions. Then we'll be sending so that if any more clarification is needed, that can be provided. Thank you all. Thank you very much. And thanks.
Thank you. Thank you, sir, for joining us today. Thank you for your deliberations. I now request Mr. Vivek Jalan, our chairperson, to take the session on income tax return filing for the year 2023, tax audit report, and other critical issues of the income tax.
Thank you.
Thank you.
Thank you, sirs, and thank you for joining from the Income Tax Department, Shri Mondol and Shri Samaddar, for your wonderful deliberations and taking the queries. So many queries you have taken. Thank you very much. And in the paucity of time, we could not take all the queries. If our members have problems in implementing this 194R, as you rightly said, some more clarifications.
You are not audible. Mr. Jalal, you are not audible.
Hello.
Yeah. Yes, sir.
Is it audible?
Yes, sir.
Yes, yes.
Yeah. So I'll switch to the next topic on the recent issues and the amendments in the income tax returns for assessment year 22-23. I will deliberate on the mainly on the amendments in the ITR 5 and ITR 6, the critical ones. I've listed down top 10 amendments in the income tax return. I propose the amendments made in the Finance Act, which industry members who would be filing the ITR 5 and 6 going forward should prepare with the documents so that their ITRs can be filed seamlessly. One or two important things on tax audit report and a few very critical judgments in the last few months which have come in income tax, which would be impacting trade and industry at large and we should be aware of. So first, I would be taken mainly on ITR 6 and ITR 5, which would be filed going forward. Friends, first is additional disclosures in the schedule for capital gain. There is now a requirement of year-wise details of cost of improvement to land and building. Previously, cost of improvement was to be disclosed just as a figure in the ITR. Now you have to disclose year-wise when you have done the improvement and what is the amount of the improvement in that particular year. So if in case of very old properties, it is important that we have the documents in place before filing our ITR. And since the old properties, this cost of improvement would have been capitalized long back, possibly we would require to have the documents, because the moment an additional disclosure is required by the department, one has to be sure that maybe it would be give rise to a query going forward on the details therewith. Again, separate disclosure now on not only the cost of acquisition, but also indexed cost of acquisition. In case of capital gains, you can see on your screen here. So you have to give the cost of acquisition and the indexed cost of acquisition. More important over here is that you calculate the period of holding correctly. So as per section 47, in case of, say, for example, debentures converted to shares, the period of holding is the period of holding of the original debentures which are converted to shares, and the cost of acquisition and the indexed cost of acquisition would be calculated accordingly. Previously, many a times there was certain issues in calculating the indexed cost of acquisition, which came to the fore only during assessment. So now the department wants to track it at the return stage itself, so that the corresponding, even at the possibly 143(1) stage, the corresponding prima facie the scrutiny can be done. Date of purchase and sale of land and building, now it is a mandatory field, and this is required for calculating the allowability of exemption under 54, 54 EC, etc. In case your property is in a foreign country, then previously only the details of the buyers were required. Now the zip code, the country and the zip code is also required, so as to track the uh, country where your property is located, and possibly exactly trace that how is the property located over there in case of high value items. In case of slump sale, there was an amendment by Finance Act 2021, whereby in case of slump sale, the method for determining the fair market value of undertaking was laid down under Rule 111 UAE, whereby the fair market value was the fair market value of the either the capital assets transferred by way of slump sale or consideration received or accruing due to the transfer by way of slump sale. Now the corresponding disclosures under 11 UAE have to be made in the ITR, and therefore it is important that you have the certificates of the experts and the computations in place in case of slump sale for disclosure in the ITR. Now this is a important amendment in the ITR. Previously, there was a confusion in case of foreign assets reporting, because the term used in the details of the foreign assets held was accounting year. So, you have to disclose, say, for example, assessment year 22-23. For the previous year corresponding to 22-23 assessment year is 21-22. So 1st April 2021 to 31st March of 2022. Previously, the foreign assets held during the during the accounting year was required to be disclosed in the ITR. Now the question was, in case the accounting year for any country is, say, the June to July. So there was a confusion as to how the foreign assets would be disclosed over here. Now it is clear that it has to be disclosed on the basis of calendar year. So for example, for assessment year 2022-23 corresponding to the previous year 21-22, you have to disclose those foreign assets which you hold for calendar year 2021. So in case you purchase some shares of, say, Amazon or Facebook on 1st of January 2022, that need not be disclosed in FA schedule for the assessment year 22-23. Deemed dividend, there was no separate disclosure for deemed dividend under 222E. Now in the schedule OS, other sources, there is a specific column table for disclosure of deemed dividend under 222E, distinct from other dividends. Significance economic presence. You all know that in case of section 9(1), explanation 2A, significance economic presence, there are two criterias, that is any transaction in respect of goods, services, property carried on by a resident with any person in India, including provision to download of data or systematic and continuous soliciting of business activities or engaging in interaction with 3 lakh users in India. Now, this significance economic presence need to be disclosed in the ITR, and if you have a significant economic presence, then you have to select under which of the clauses you have a significant economic presence. So this further, in case of international tax, it gives the department more information to scrutinize the returns. Limitation on the rate of surcharge of dividend. Now that is as per the amendment in the Finance Act 2020, that is now separately disclosable in the ITR. Exclusion of dividend income from scheduled business profession. So in business profession, there are various heads like house property, capital gains. In case your profit and loss account is credited with a certain income, but that is not charged under PGBP, but it is charged under other head, you have to exclude that from PGBP in your return of income. Now even dividend you have to separately disclose and exclude from there. Secondary adjustments. Now this is interesting. For the purpose of transfer pricing, there is a new schedule which is added, TPSA. So all secondary adjustments which you are doing as a part of your transfer pricing study, that has to be disclosed separately in schedule TPSA, and the total adjustment made in respect of all assessment years have to be disclosed separately in TPSA. Section 43B is applicable in case the deductions are taken on the payment basis in case of payment to deposit taking NBFCs or special non-deposit taking NBFCs. Now a separate disclosure has to be made in other information schedule, part A of OI schedule. Disclosure of alternate tax regime option if you have chosen under 115 BA, BA, BAB. If you have chosen the alternate taxation regime in this year, you have to specify the date when you have filed the relevant form 10 IB IC ID. If you have chosen it in the previous year, you have to again furnish the date and the acknowledgement number of the form 10 IB IC or ID when you have filed that form. In case of unincorporated entity investment, so if you have invested in an unincorporated entity, there is a new schedule IF. If you have invested in, say, AOP, BOA, AOP, etc., which is not incorporated under the laws, then there is a separate schedule where you disclose the details of the unincorporated entity where you have made investment, like the name of the entity, type of the entity, PAN number, whether the entity is liable for audit, whether section 92E is applicable, share of profit in the entity, amount of share of profit, and capital balance as on 31st March in the entity. This was not disclosed elsewhere. Now there is a separate schedule and an additional disclosure is required in this behalf. So these are the various important amendments in the ITR form, which would be impacting especially ITR 5 and ITR 6. There are various other amendments also in the ITR forms which are there in this for this assessment year, which you can go through. But these are the critical 10 amendments which we thought we should discuss so that you can prepare for this well before the ITR filing date. We all know that date extension now is a very, very rare possibility going by this 31st July experience. Some very, very important case laws, okay, in the last few months, which we'll discuss out here, and which may be required in your day-to-day businesses. First, in case of warranties, now there is a big issue in case of warranties, not only in GST but also in income tax. The question is, and which the department is asking a lot of times, is they want to disallow this expenditure on warranty which is made on a provisional basis. However, the law is very clear, and as per the previous Supreme Court judgments, and in the case of Siemens Healthcare Diagnostic Limited, the ITAT Ahmedabad 2 ruled there are two important things to be seen in case of warranty. Number one, the warranty provision should be made on a scientific basis. So it has to be calculated on a scientific basis. Number two, the warranty provision which has been made in the earlier periods, that has to be substantiated going forward, that it has actually resulted and crystallized in actual warranty which has been given in the market. So two important criteria you require to fulfill to get this warranty provision expenditure allowed to you. Similarly, in GST, if you see, there is always a question whether this warranty income would be considered as a supply or not. here in GST, if you go through this question number 20 of CBIC flyer on IT ITS, it is very, very clear that the warranty is a cost of the product itself, would not be considered as a supply. Now, very, very interesting case and judgment in the case of Shri Shiv Prakash S. Chandak. Now, in the customs department, as I said in the very beginning, there is an interplay now from customs, GST, income tax. There is a 360-degree mechanism by which the department is now scrutinizing. So, in case of customs, in case the valuation was contested by the customs department and the taxpayer agreed to that valuation, paid the excess customs duty. The question is that the purchases in income tax was disallowed on the basis that these were not correctly reported, and the value of the purchases that was questioned by the income tax department. Also, the corresponding value of the sales of that item was questioned by the income tax department. Now, the Honorable ITAT Mumbai, it held that the value of the purchase could not be disputed by the income tax department without any reason. However, simultaneously, it also had a very interesting point which we all should note, that in case there is a valuation dispute in customs, in income tax, it is not that you just contest that, okay, it was customs law and here this is income tax, and so there is no relation. You as a taxpayer or an assessee in income tax, you have to have sufficient records to prove that, gentlemen, that here our value of sale is so much and that is the open market value, and here it is sold to unrelated parties, so that the value of the sale in income tax can be justified. So just by contesting that, okay, that was customs, this is income tax, that would not do. Reimbursements, there were many questions under 194 capital R TDS. Now, this is becoming a big issue, not only in income tax, but TD 194R, but also while computing the income in case of income tax. Generally, what happens in case of pure agents under GST or reimbursements under income tax, that the persons who are claiming the reimbursements, they net it off in the books of accounts, and correspondingly they do not disclose in the ITR. They do not disclose either the receipt of the reimbursement or the expenditure for which reimbursement is claimed in the GST returns also. However, what the client does or what the customer does, that even on the value of the reimbursement, it deducts a TDS. Now that is reflected in 26 AS, and that opens up a Pandora box. Now, friends, in this 194R, it is very, very clear, and that has to be followed by all the taxpayers and assessees, not only in income tax, but also in GST. The principle is very clear. In case you are claiming a reimbursement, number one, if the bills are in the name of the principal, then you do not disclose it in the ITR, do not disclose it in the GST and net it off. However, if the bills is it in your name, then you have to disclose it in your ITR as an income, claim the corresponding deduction, so there would be no revenue impact for you. Even in GST, our view is that in such a case, it is better always to charge GST and show it as a supply of goods or service, as the case might be, and then raise the bill for reimbursement, right? That makes the situation very, very clear. Let your principal deduct a TDS under 194JR or whatever the case might be. However, you would be saved from further issues in the department. Now, while this was struck down by the Allahabad High Court in the case of Distributors India versus Union of India, that reimbursement cannot become the ground for reopening. However, going forward, what we see it, the way we see it is that it is going to become a big issue, and therefore it is important to streamline your processes from now itself. Aggression is the best form of defense sometimes, even in tax cases. Now, it was contested even in case of undisclosed turnover cases, that the entire turnover should not be added to the income of the assessee. Only the peak, the profit element, applying the peak rate of profit, that should be added even in case of undisclosed turnover. The same was upheld in by the Honorable ITAT Ahmedabad in the case of Himanshu L. Sethia, HUF. So, this there are other also decisions, simultaneous similar decisions in the last few months itself, where it was held by various ITATs that only, even in case of undisclosed turnover, only the profit element has to be added to the income of the assessee. Provision for obsolescence of inventory, again same like warranties, various field officers have disputed this provision for obsolescence of inventory, but again, just like warranties, it was held by various courts, and also the Honorable Apex Court way back in the case of Rotok Control India laid down the same two principles. The provision has to be made on a scientific basis. It has to be substantiated going forward with the actual write-off of inventories based on the provisions. So if these two principles are satisfied, then the deduction on account of provision for obsolescence of inventory or warranties, as the case might be, can be claimed. Again, some interesting judgments and some interesting cases actually, which field formations have brought to the fore. Provision for expenses was added back when they were not supported by invoices or bills. Now, say for example, audit fees, the statutory audit fees, that is always on the basis of a contract, and provision is made, although the auditor issues its audit bills only once the audit is done. So it was disputed in the case of L'Oreal India Private Limited, and it was held by the ITAT Mumbai that actual bills may or may not be there, and provision on the basis of contract, that would be allowed as a deduction. Matching of income and expenses every year, that is not required. As law, there can be some mismatches about and in the certain expenditure cannot be disallowed in a year just because the corresponding income is appearing in the next year. So friends, our other speakers are there, and even the principal chief commissioner of CGST is there, and our next speaker, Mr. Ashok, is also there. I would circulate this PPT in the paucity of time. We invite our next few speakers to deliberate, and
Yeah, there is a technical issue, what we have said. Now it has been solved and people can join now. And people have joined also. Those who have been were unable to join, they have joined, Mr. Jalan. So I have also informed everyone again to rejoin. And now we have with us Mr. Dharmarajan Ashok. He's the head taxation of direct taxes. I would request Mr. Ashok to please deliberate on section 194R, the industry perspective, what the industry is facing now. with the introduction of this new section.
Okay. People hear? Can you hear me? Hello?
Yes, you're audible.
Okay.
But you're not visible.
I can't see my video. Okay. I have a few slides. I will just try to share that on the screen.
Okay, I'm giving you the co-host right.
Yeah.
Yes, your screen is visible, sir.
Okay. Okay. Thanks for the time given from the industry perspective. I heard Vivek speak about the various aspects of 194R from ITR perspective. And even otherwise, I have learned department officials speaking about 194R. So to that extent, it could be a repetition of what I'm planning to cover, some part of it. But the intent is to talk from an industry perspective, concerns and agree as where we need suitable applications or guidance on CBDT. Because most of us, I would say, would like to be a compliant corporate citizen, right? A new section has come, applied for years. Yes, we are willing to, but we should be clear on which kind of transactions will get affected. And there's a lot of new AI, especially on MI4R. Okay, with that caveat, I'm just starting here. I'm sure you are all aware of this, but just for hygiene's sake, I'm saying it is effective for July. And Canvas is a grade of 10% on any benefit of 36.
Sir, just a small interruption. Your voice is not clear. It is echoing little.
What could be the meaning?
Hello.
Yeah, I heard you say that, but I am alone in my room. I'm the echo cancelling. Okay. Is it better now? Is it?
Yeah, it's better.
Okay. Okay, I'll continue here. Period is a rate of 10% on the benefit of requisite to a resident, RLC from business or exercise of profession by such resident. These are charging provision for various purposes. And it also proceeds to say any benefit of requisite is some kind of party in cash and party in kind, provided the insured is deducted and paid in stock as benefit of requisite. Even if it is given kind of party in cash, party in kind. Okay, I would request to mute. No periods will apply obviously for any benefit of acquisition value not exceed 20,000 rupees in a financial year. Since this law has come from actual, this 20,000 should be completed from 1st April, but only on that benefit received subsequent to July will get affected. Periods will get affected. Nothing is some substance revision. And June 8 obviously for deposit fee under section 7 of the next month. Obviously, in case of month of March, you can deposit by 30th of April. Okay, now CBDT came out with most of you have seen it and kind of the industry people, I'm sure. Here would have speak as discuss various people to understand what it means. There are many articles, even Mike also talked about it, somewhere whether the circular is some kind of superseding even the section itself. But our objective is to be compliant and see how much we can understand being compliant with it. Okay, now it says absolute benefits, requisites in cash as well as in kind. Now, there is a Supreme Court decision by Mahindra, and very clearly in the context of money, a matter of a loan. Supreme Court had the discussions about a loan having partner of payment on which subsequently was came down. Supreme Court also analyzed 24 on 41 and categorically said, leading 24 in talks of the benefit of whether calculated into money or not, the way the language is drafted cannot include money alone transactions or cash transactions. Similar language has been adopted in 194R. And the memorandum or explanation, there is a reference to 194 as well. If this is to be seen as a mirror image of 184, and TDS and the 194R is in the context of a 184 transaction. Supreme Court decision should be kept in mind, meaning that it categorically says cash transactions are out of the area of 184. I would say the converse of that or a complement of that would be that non-required also should not apply to such transactions, cash alone transactions. We come to later in our discussions if there is time. But this circular proceeds to say you are not to check whether the recipient, when it is taxable, with the money get received from the payer. So that opens up under a box, you direct TDS and the party has to declare and return. Next 26 years declaration of such TDS declared. Then there is one document I should say confirmation. Some respond rebates for all the customers. More their benefits and preferences. CB for circular categorically say no TDS in the 195 will apply on the same. I'm sure most of you will be aware of, especially the industry. There's something called buy one get one, which we offer the consumers. Get one price items, purchase of 10 items, discount, etc. It appears from this slide that TDS and the 194R will not apply. I hope I am audible.
Right?
You can hear me, right?
Yeah, a little. The sound is echoing a little, but sir, you can continue.
Just, I know what the reason. Okay.
Okay. Above exemption cannot be extended to other benefits in connection with sale. For instance, gifts given a car, TV, gold coin, mobiles. Typically to dealers and distributors, companies do pass on certain benefits on achieving certain targets, etc. Such benefits are taxable, will definitely get covered in the 194R as a benefit or a perquisite passed on. In the context of social media influencers, the circular very clearly says, if the product given to the social media influencer to advertise or talk about the product, if they don't return it back, then it is a benefit or a perquisite. TDS and a 194R will apply. And they return it, then no TDS has to be applied. So the question comes, if you send a packet of noodles for them to talk about it, they are not going to return it back. And a noodle packet is 10 rupees, 15 rupees. So of course, there is a value cap of 20,000. I'm saying there could be many such scenarios. If it's a mobile phone or a iPad or some such items being given, then such a concept may be applicable. But the way the language is written, so it could be kind of, it seems to be kind of taking everything under its sweep. Okay, dealer conferences, I did hear many people raising this issue and income tax officials also clarifying on this. There are certain kind of examples given or illustrations given in the CVDT circular. Now the question comes, when you call for a conference, people obviously have to be accommodated, and it's not that they can land on the same day of a conference. People come from far-flung places. They may be coming for a day earlier or two earlier. So these are all calls to be taken. I would assume as industry, while we want to be compliant, certain practical issues should be kept in mind and before saying that will be a 194R issue. And conferences obviously are held for business purposes. I have considered new product launches, accounts reconciliation. Many a times people land up. If you say you owe me 1 crore and that fellow says I owe you 75 lakhs or 50 lakhs, they end up to send their people to come and discuss and reconcile and understand and agree upon a position. All this I would say is the normal course of business. and they come to the office, you host them for lunch and dinner. So these are all normal course of business, right? If you start accumulating all this and see where it's crossing 20,000 and I'll pay 124 hours, we'll be splitting our hair. Okay, reimbursement of out-of-pocket expenses. I heard Vivek also talked about it. Okay, we have few scenarios. I'm talking again from industry perspective. While the circulars puts a binary situation, if the bills are in the name of the payer, no TDS. But if the bills are in the name of the person who's claiming the reimbursement, then apply TDS. It can't be so black and white scenario, because while the example is given in a particular context, as if a consultant, suppose I engage Vivek for an assignment, he quotes a fees of say 15 lakh rupees. And the fees is for the job he is taking it from me. And suppose in the process I tell him go to Bombay or go to Delhi, get this job done and come back. He never quoted the 15 lakh fees to me, that all expenses are factored in that 15 lakh fees commercially negotiated between him and the company. And to the circular is assuming the service provider is supposed to provide the fee quoted as an all-inclusive fee. And so any expenses incurred, it's an added income to him. So it's a benefit or a perquisite. But that is not the way 99% of the consultants work. It's always OPs and extra actuals. Otherwise, they would have inflated their fees if it's an all-inclusive fees. And we interact with the many big fours also, Deloitte, PwC, I don't know who is there, EY. They have a different concept, which is they agree upon a fees and they put a OP as a percentage, 2.5% or a fixed amount for the job they are providing as administrative expenses. Currently, I don't know about my other industry colleagues, we deduct 194G on the entire amount. Principal amount, the fee amount plus the out-of-pocket expenses. I don't foresee any issue there. And 194 hours should not be applicable there. But there comes a situation where we agree upon a fees and the contract itself very clearly says any out-of-pocket expenses to be incurred with the prior approval of the client. There is no way it can be considered as a benefit or perquisite, because it's in my interest as a client or as a company. I am sending the consultant to do certain travel or certain other expenses to be incurred by him. So, but the circular, the way it's come out, there could be kind of a dispute going forward. Why have you not deducted? Because if the department official applies the binary, the bill is not in your name, so TDS should have been deducted, then it'll create a big dispute. There is a need for clarification. I would only urge, as long as the fee agreed upon, the commercial terms of the contract clearly says it's an all-inclusive fees, including travel, etc., then any additional expenses incurred by the client or reimbursement given by the client, you can apply 194R because it's an additional benefit being given to the party. But otherwise, it doesn't make sense to say that just because reimbursement bills on the name of the service provider, it can't be said it's as a benefit. That would be my submission. But there are also cases, I would say, where we engage, because when we have huge number of dealers, distributors spread across the country, you need necessarily certain service providers to handle. We have some 8,000 distributors. It's not possible for a company to deal with everybody directly. Certain services might have to be provided through an intermediary who are capable and have the capability to provide such services, where we tell them, okay, do all these things, claim reimbursement, I'll provide an additional service charge for the services you're providing. We currently deduct TDS on the service charge, what is being paid to the service provider. But what he pays to those dealers and distributors and claims as a reimbursement, we do not deduct TDS, because the service provider deduct TDS on such payments made to those dealers and distributors. So we are taking a position. I would like to again hear from people here, experts like Vivek and department officials, if they are there, that where the service provider is deducting TDS on payments made to our dealers and distributors and in turn claims the reimbursement, giving proof that I reimburse somebody 10,000, 20,000 or 50,000, I deducted TDS under 194C or whichever section it is, then no point in telling such reimbursement again will attract a 194R just because the bills are not in my name, the company's name. The bill is taken by him, he deducts TDS and he claims reimbursement pursuant to a contract. He raises a separate bill for his services and I'm deducting TDS there. So I would assume that should not come under the category of a binary as it currently appears in the CBT circular. Okay, we talked about the first point. Okay, TDS valuation of the perquisite, there is a provision there for goods purchase price will be value. And manufacturing price charge to customers. I think it's fairly okay in terms of this definition. And okay, now comes a situation. It's possible that where you may have to gross up the TDS cost. Because certain cases, a party may not be willing to provide a service if you say, I'm going to deduct TDS. If you end up picking up the TDS cost because you want to be compliant, then there will be a need for grossing up the costs also. And TDS is not, suppose the value of a benefit is 100 in an example, and 10% is TDS, and you are picking up the cost, that 1 rupee extra, that 11 rupees will be your TDS, because the 10 rupees is also an added benefit. So we should keep that in mind where we talk of grossing up the TDS to our account. Okay, obviously there are queries. The biggest one which industry is facing is write-off of bad debts. See, there are, in the course of business, there are dealers with whom we deal with. Some cases, the parties may not be honoring their dues, despite follow-up, legal action, etc., etc. We end up writing off such dues. Now, the way the circular is quoting Ramaniam case, decided by Madras High Court, this gives an impression waiver of a loan. In the context of waiver of loan, it says it will be a taxable income under 28(4). It leaves that. The circular does not say it will also attract 194R. But if you understand that the intent of that circular, there are few other issues which come up. Ramaniam case has been superseded by Supreme Court. Number one, in Mahindra and Mahindra case. Number two, you take a situation that, of course, handles about loan, waiver, etc. But take a normal business transaction by a company. You have a dealer, he is not paying you the money, and you pursue, take legal action, he is not traceable. You end up writing off. Now you say it's a benefit I'm giving to that person. Suppose I'm writing off 1 crore of rupees as not received. And to say that another 10% you have to pay, once you waive it off or write it off, you have to direct TDS or pay TDS on that. Then my write-off is not 1 crore, it's going to be 1.1 crore. Again on the 10 lakhs, again 1 lakh will come. It will become a loop of, because you are saying it's a benefit I'm giving to him. I don't think that would be the intent of this circular or this section, where especially when a party has stopped dealings. Of course, in the case of account reconciliation, in the case of business continuity, there could be some to and fro happening. The party says, okay, we are claiming 100. He says, I'll give you 75. It's possible that could be via media of 90, 95 getting agreed. And entries are put to square up the account and proceed with the business transaction. This all happens in normal course across businesses. Are we to think through all these transactions through the prism of 194R raises a very, very grave concern for industry. Then, see, one is we deducting TDS, then this entire income is supposed to be offered by the other side as income in his hands. See, imagine a party who's refused to pay the money, you are thinking of writing off, but he continues to show as a liability in his books. Then 41(1) will not get attracted, which talks of if the waiver or the party has got a deduction originally, when he writes back, he has to offer it for tax and a 41(1). Even that will not happen. So these are the issues, and write-off of bad debts in the normal course of business after genuine efforts by a corporate creditor has to be kept out of the purview of 194R because it will add cost to running the business. I hope CBDT comes out with the clarity on this. Last time we heard Mr. Kamalesh Vasne speaking in a Bombay association. He was indicating they may consider favorably for the banks because banks have made large-scale representation on this. I would request the industry through the auspices of BCC&I also to make a very strong and practical representation how this will impact industry. That will be a great kind of endeavor from the association to the industry. Okay, the other issue, I know whether it got covered. See, there are many a times, for instance, scratch card, etc. are kept in a biscuit packet or atta packet. Gold coin somebody may win. These are all to end consumers. This should not come under 194R because it is not in the course of business or exercise of profession, because the consumer is a consumer. He is not a dealer or a distributor in the business with us. He buys a product, he opens a packet, he finds some gift coupon there. that we believe should not come under 194R. This I already covered this. Yeah, see, I'm sure the recipient, the biggest hurdle which is going to happen in the industry, I don't know how many of them have started facing. I heard already from automotive industry, etc. Because while TDS is 10%, but if it is to be considered as income in the hands of the recipient, then he has to offer at the slab rates. Unless he is a company, it will be 35, 42%, can go up to 42.744%. So it's going to be a big backlash. Parties may say we will not provide such services if you are going to deduct TDS under 194R, which may impact business. I hope CBDT comes out with a supplementary circular to clarify these issues. And whatever we do, documentation is the key. We have to clear. We believe that whatever stance we take logically, support by documentation, I think department officials will be fair enough to consider on a facts case-to-case basis and decide before deciding that we have violated 194R or not. Okay, this is what on 194R. 194S, if Vivek, you want us to cover it, I can have few slides on this to cover this.
Sir, 2-3 minutes on this, just the basics.
Okay. Okay, I'll just straight away go and look up the definition under the section 247A. Okay, basically you would have heard about Bitcoins and other virtual Ethereums of the world. The specific CBDT circular says gift cards, vouchers, mileage, rewards, loyalty points, they are not virtual digital assets. A big relief for people who may be worried because that is also in a digital form. Obviously, currencies are not part of that. That is one thing I want to highlight. The second thing, NFTs, okay, just see the examples of what is a VDA. Say Bitcoin is there, Ethereum, Dogecoin, there are many such things. Typically, they are certain coin form, but the real thing is not the coin. The backside of this coin, there is a cryptic message that the encoding which is there, that is what is non-fungible, non-transferable easily. That cannot be broken just like that. That is what is carrying value. And NFTs, even Amitabh Bachchan made $1 million by selling his NFT form of his various pictures. This is what is in terms of the NFTs and VDAs mean. And TDS is 1% from July 1st, 2022. It is not applicable for amount above 50,000 rupees for specified persons, less than 50,000 and less than 10,000 for others. Specified person basically individuals and Hindu undivided families. Okay, and 206 AB and 203 will not apply for such individuals and HUF. Okay, taxability 115 BBH has been introduced, and VDAs will be taxable at the rate of 30% like any other income from other sources. The only difference is you can only claim cost of acquisition, if any. If you have self-generated a virtual digital asset, the question mark is there whether that will be eligible as a deduction. And no set-off of losses. If you sell Bitcoin and made a $10,000 profit, and you sell another coin, Ethereum, and made a loss of 5,000, you can't set off against each other. The gross amount is taxable at the rate of 30%. And you cannot carry forward such loss. You can't set off against other heads of income. There are enough restrictions. And gifts are taxable as of the recipient. Okay, now, so the clarity is not there whether people do transactions through Binance and there are coin-based kind of foreign exchanges. Whether that will be, how it will be taxed, it's not very clear. People also talk of ICO like IPOs, how it's going to be taxed is not clear. And how to calculate profit on VDA. The methodology for FIFO or LIFO or every coin I sell, I have to show separately profit. One coin loss separate, it's not clear. First of all, the fundamental point is whether VDA is legal or illegal. That itself is not clear from Indian government perspective. Government has told we are taxing transactions which are happening. That doesn't mean that transaction we are treating them as legal. That is the statement by the minister in the parliament. Several countries have made it illegal and banned it. Some are allowing such transactions. RBI has openly opposed legalizing VDA. They say it's a clear danger. Anything that derives value based on make-believe without any underlying is a speculation in a sophisticated manner. They are just not approving it. So now Finance Minister recently she spoke about need for commonality of approach for regulating VDS. Government is worried. If they say ban, people may start doing transactions which may be escaping the tax net. On the other hand, if they say legal, still they are not sure how people will evade it. They are looking for a global approach, like the global minimum tax kind of an approach. So let's see what they come out with. That's all I have to say. Thank you.
Thank you, sir. I now request our guest of honor, Mr. Ashish Chandan, Principal Commissioner of CGST, to please deliberate on GST assessment and scrutiny's departmental perspectives.
Just a word, welcome to our Principal Commissioner, Shri Ashish Chandan, to our webinar on Bengal Chamber. And our next speaker, Shri S.K. Panda is also here. We recognize the presence of Shri Panda also over here. So over to Principal Chief Commissioner, sir.
Thank you, Mr. Jalan. And good afternoon, Panda sir.
How are you?
Very fine, sir. It's a pleasure to see you being a part of this discussion. Sir, so I'm extremely thankful to the Chamber for letting me be a part of this very important topic. There are a few things I would like to share in the limited time we have. First is a bit of a historical perspective on scrutiny. There is a common misconception which I have encountered in the trade that this is a new thing which has started and the GST laws did not really contemplate it. So if you allow me to go back a bit in time, maybe 25 years back when the Chelaya committee recommendations had come in 96, and we had moved over from invoice-based assessment to self-assessment. That was a time when the scrutiny of returns was given the focus it needed. Thereafter, there was the Vijay Kelkar task force, and it said that apart from audit anti-evasion, you must have scrutiny of returns. So thereafter, we did have a number of scrutiny guidelines in excise service tax. All the gentlemen who have worked in the legacy era would be aware of the preliminary scrutiny, the assessment scrutiny, classification, valuation. So the idea is to convey that the scrutiny of returns in GST is not a new thing. It has a legal legitimacy and a historical perspective. Now, regarding the legal provisions, what I would like to say is that it's a very simple provision. There's just one section, that is section 61, and there's just one rule, that is rule 99. The complete scrutiny of GST returns is codified, and it's covered by just these two provisions. There is no other section or rule or sub-rule which covers the scrutiny. Regarding the distribution of the center and state taxpayers, it would be very important to highlight that for all the center taxpayers, the guidelines have been issued in April 2022. They're only for the center taxpayers. They do not cover the state taxpayers. So these are meant to be applied uniformly across the country, which means that all the center taxpayers would be covered by the same set of procedures, whether they are in West Bengal or in any other state. The state taxpayer scrutiny, of course, is a bit different. And I'm sure that some representative from the state would be able to explain about the guidelines followed by the different states. But the center guidelines are the same all over the country. And there are basically 3 points to the scrutiny process. The first is, how do we select? So the selection of the taxpayers is completely automated. It is based on the risk parameters. It is based on various reports which are generated based on the profile, the transactions undertaken. and it is a minuscule fraction of the total number of taxpayers. You could say around 2% or 3% of the taxpayers would be selected for scrutiny. The point I'm trying to make is that there is no human intervention here. It's purely automated, and the names of the taxpayers are disseminated to the field formations for the purpose of scrutiny. Now, who does the scrutiny? For the purpose of scrutiny, like in the legacy era, the proper officer would always be the jurisdictional range officer. He's the officer who does the scrutiny, who points out the discrepancies and arrives at the findings. There is no other officer who is competent to do the scrutiny. So if any taxpayer inadvertently gets a notice of scrutiny from anyone other than the range officer, I would request them to approach, because it could be an error of the system or it could be a human error. Now, once the returns are selected for scrutiny, all the returns flow in a bunch. Means there is no discretion with the range officer to pick up a return for one financial year. He has to pick up the return from 2017-18 till the last financial year in one go. How he does the scrutiny, there are detailed guidelines given to them. An example I can give you is the e-campaign, which is launched by the income tax, where based on the statutory disclosures, which are made to the income tax department by the banks, by the financial institutions, they pick up the high value transactions and they send notices if they find that the declarations have not been made properly. This is somewhat similar to that. Based on the risk parameters, the selection is made, and then based on the reports generated and available on the common portal and elsewhere, including the departmental IT tools, the scrutiny has to take place. The process is something like this. It's totally online. The process goes in this manner that once the return is picked up for scrutiny, if there are no discrepancies which are found, an internal order is passed by the range officer and the matter gets closed. Now here, the taxpayer is not going to get informed, and he may not even know that his return was picked up for scrutiny, was analyzed, and was found to be correct. It's a bit like income tax, that of the returns we file, it's only when some discrepancy arises and we are informed. Otherwise, we wouldn't know whether a return was picked up and was found correct or whether it was not picked up. So that is something to do with the ease of business, that only those taxpayers would be brought in the loop if there is a discrepancy. Now what happens if after picking up and scrutinizing, the range officer finds that there is a discrepancy? In that case, he has to inform the taxpayer online in a specified form, which is a ASMT 10. He has to inform the taxpayer, highlighting the discrepancies and seeking his response. This is the first time that a taxpayer would get to know that his return was picked up for scrutiny and certain discrepancies were found. There can be no two ASMT 10s. It means the range officer has to be very, very clear while sending the ASMT 10, because once he issues an ASMT 10, he can neither revise it nor can he add another ASMT 10. He basically makes it clear that whatever discrepancies the department has found are contained in the ASMT 10 under the discrepancies column. So after the taxpayer gets the notice of ASMT 10 at his registered email ID, he has a time of 30 days in which to respond. This time is extendable, but generally, based on the workload, it may not always be an advisable option to seek time, because 30 days we have found is a long enough time for you to answer just the return-based discrepancies. Now, what would the taxpayer do once he gets a notice? Either he is going to agree with the discrepancies or he is going to disagree. In either situation, he has to respond within the 30-day period, and the form for that is the next one. This was 10 and that one is 11. So in form 11, he has to respond to the same range officer, either stating his agreement or stating his disagreement. Once the range officer gets the response of the taxpayer, then his work starts. He is then supposed to take a decision on whether he agrees with the taxpayer or whether he disagrees. If he agrees with the taxpayer that the discrepancies have been suitably answered, he will close the case at that stage and issue a Form 12. That is called a closure order. In this closure order, he will write the reasons why he has agreed with the taxpayer, that he's satisfied with the response of the taxpayer, and therefore he is not proceeding further with the scrutiny. A copy of this closure order will necessarily be sent to the taxpayer because now he has to be informed about the result of his response in ASMT 11. After the taxpayer gets the ASMT 12, it means the matter is over. His return was picked up, was analyzed, his answers were examined, and everything has been found to be correct. What happens if the departmental officer is not satisfied with the response given by the taxpayer? In that situation, the matter will move to the stage of the show cause. There will not be a second chance given to the taxpayer to keep on responding because the process is very cyclic and it has very clear time limits for each stage. So when the show cause notice is issued, it will be under our regular section 73 or in some rare cases under section 74. That again would be sent to the taxpayer. Now that show cause notice is going to be, while it's going to be under section 73 or 74, it will be a show cause notice which is in response to the scrutiny. So there will be a legend in the show cause notice that this is in response to the ASMT 12, which was proposed to be issued, was not issued, or in another situation, this is in response to non-responding to the ASMT 10 issued, or it could be in response to not agreeing with the response of the taxpayer. In either of the situation, the show cause would be categorically be just a normal show cause notice. It will be a demand show cause notice with the interest and the mandatory penalties which are there. Now, this was the departmental process. It is very simple and it's very, very transparent. The second part of what the topic for the session is the expectations we have from the taxpayers. Now, in this process, the taxpayer is really not expected to do anything except to respond. And in case he doesn't get the notice, there is no reason he's going to respond because he can't be expected to respond to an expected ASMT 10. So when we say that we are having expectations, what we really mean is that we are highlighting the precautions which we feel the taxpayer should take. In that respect, based on our periodic interactions with the range officers, there are certain precautions which I would request that if the taxpayers are able to implement in their systems these safeguards, the process would become even smoother. The first is the common misunderstanding that the ASMT 10 is a show cause notice. It is not a show cause notice. It is just an intimation pointing out the discrepancies. It is not necessary that an ASMT 10 means eventually there would be a show cause. As we have discussed earlier, there may be no need for a show cause if the response is found to be satisfactory. The second thing is to please adhere to the time limit of 30 days to respond to the ASMT 10. The reason is that many times it will not be possible for the range officer to extend the time period of 30 days beyond a particular period of time. And then the situation would be as if there is no response from the taxpayer. The next thing is that except the ASMT 10, there is no other prescribed document by which the discrepancies would be intimated. So if there are any letters which are issued to you, if there is any other correspondence, it is not a valid means of corresponding. The only valid means is the ASMT 10, which is issued by the range officer. Similarly, the response has to be purely under ASMT 11. There is absolutely no necessity for anyone to come and visit to submit a document in the receipt section because that will not help. The entire process is automated. So when we examine the process in a random manner, we look at the flow of the ASMT 10s, of the 11s and the 12s. So there is absolutely no way in which something offline can be scanned and put in this process. So please respond only by ASMT 11. If you really wish to, you can send a copy of the ASMT 11 by post, but substituting one for the other would not serve the purpose. In the ASMT 11, some of the mistakes we have seen because of which the thing gets delayed is sometimes the taxpayers do not give a complete breakup of the tax and the interest amount. They mix the things together, which makes it very difficult for the officers to ascertain whether the taxpayer has agreed to the entire discrepancy or only a part of the discrepancy. The second thing we've noticed in the ASMT 11 responses is that the issues are not answered in a segregated way. They are put in paragraph forms and a number of issues are answered together. That also makes it a bit difficult to analyze what the response is. So I would be requesting that if it is possible, please respond to each issue in a separate section, because your ASMT 11 form prescribes different sections for different queries. So these are the simple safeguards. There are no other expectations from the taxpayers in this process. So as we have seen, the process is quite simple and it's very transparent. What I would request again is for all the taxpayers to have confidence in the system, in the competence of the officers who are undertaking the scrutiny, and in the redressal mechanism. So the whole idea should be that at the end of the day, if your return is not picked up for scrutiny, it should be a welcome event for you. But in case it is picked up, it should be even more welcome, because then all your errors, human errors, inadvertent errors, your ignorances of law get clarified and sorted out forever in one go with the help of the departmental officer. Thank you.
Thank you, sir, for your valuable deliberations on the issues. There is a question on the chat box by Mr. Biswajit Sarkar. Whether ASMT 10 is issued offline, is it valid?
ASMT 10 has to be issued online. Offline would mean that it is reaching the taxpayer by offline methods. So I could only think of it as being sent by post. That probably is not what is sought. In this respect, I'll say that there are sometimes people who are given copies of ASMT 10s. I have no objection at all if some representatives who are there for some other work, they take copies of ASMT 10, but that won't help, because in the registered mail of the taxpayer, the ASMT 10 would already have been issued. And the response has to be to that ASMT 10 online in an online manner.
Right. There is another question. I think this is already answered, whether ASMT 10 can be without a DIN. I think without a DIN, ASMT 10 would be invalid. Your view, sir?
I would request through your chamber to bring to our notices ASMT 10s which are without DINs, because DIN is not a new concept. It's been there for years now.
Right. Sir, one question from my side is the cross procedures where a dealer is registered in the CGST department and SGST department invokes section 67 or any other section on the dealer, where the dealer has already been scrutinized and audited also. So is there any coordination between the both the departments for the same?
Yeah, it's a common question, and we only feel sad that it's raised so often, except for enforcement action, which is the enforcement wing of the State Department, and the preventive anti-evasion DGGI wings of the Central Department. There are watertight compartments insofar as the taxpayers are concerned. Meaning, a dealer who is a center taxpayer registered with the central GSTI, his scrutiny, his audit, everything can only be done by the center, and ditto for the state. On the other hand, there is absolutely no impediment on an enforcement action being initiated against that dealer by the state enforcement wing. What cannot happen is the state enforcement officers undertaking an audit or a scrutiny of a center taxpayer and vice versa. The problem should not really arise because what people generally feel is that if scrutiny of the returns is taking place or the audit is taking place, the enforcement action gets subsumed in that process. It doesn't. The enforcement action is generally, in fact, almost always going to be on issues which are not part of the declared details in the returns. Audit also does an audit of the declared details. The scrutiny is of the declared details. More often than not, the enforcement action is on something which in their view is concealed. But yes, there is a redressal for this also. In case there is an enforcement action by the center on a state taxpayer, which is covered by an audit or a scrutiny of the state, there would be no overlapping because once it's informed that the same issue has been picked up by the state officers, the show cause, at least to that extent, would not be issued by the center. There would, in any case, there would never be a duplication of demand. Up to a certain stage, yes, may be avoidable, but there could be a duplication of procedure.
Right, sir. Thank you for a detailed reply. There is one more, two more questions, sir, for you. And we'll stop at 2 questions in the interest of time. First is Mr. Sudipta Gupta. Whether service tax audit for financial year 16-17 is time barred now, and if so, under which provision?
Okay,
I think Mr. Gupta. Yes,
please
sir.
let me answer that. The GST law was implemented from 1st of July. So in the financial year 17-18, there was the first quarter, which we call Q1, that is April, May, and June 2017, which was covered by the legacy taxation, excise, and service tax. Now, whether it is an audit or whether it is a preventive action or whether it is a scrutiny of any legacy tax, excise or service tax, the last date for filing the return for the month of June for an excise case was 10th of August, was 10th of July. So the last date to give a show cause notice ended on 9th of July, 2022. Similarly, the last date for filing the ST3 return in service tax for Q1 was 15th of August, 2017. So the last date to give a show cause, even invoking the extended period for a legacy service tax issue, is going to be 14th of August, 2022. Which means is, if today, as we talk, there is an enforcement action going on regarding excise service tax, or there is an audit going on regarding excise service tax, the excise show cause notice may not be possible to be issued. It's already, the time is over. And there's probably a week left for the service tax show cause to be issued.
So, sir, is Supreme Court suo motu order that would not, that period of suo motu order that would not be counted for limitation?
That is counted, and that is it is because of that order that we were able to issue a large number of show causes up to the 31st of May, 28th of May, which were otherwise time barred in the preceding period. But it will have no impact for the period which is after the end of the relaxation given by the Supreme Court, which you could say from the 1st of June. Which means cases which are getting time barred on the 15th of June are going to get time barred on the 15th of June. But yes, cases which were getting time barred, say on 15th of January, could be stretched up to 28th of May, and that we have done.
Okay.
Okay. Thank you, sir. Thank you for joining us today. We have Mr. N.C. Guria, Joint Commissioner of Revenue from the Directorate of Commercial Taxes, Government of West Bengal is with us. I now request Mr. N.C. Guria to share the state perspective about the GST assessment and scrutinies.
Good afternoon, all. Am I audible?
Yes, sir, you are audible.
Good afternoon. First, my respect to Ashish Chandan sir, Principal Chief Commissioner of Central Taxes, to Sri S.K. Panda sir, Ex-Special Secretary Government of India, all the respected guests and participants. Thanks to BCC&I for organizing this webinar on some very pertinent topics today, both on direct and indirect taxes. Thanks to Mr. Vivek Jalan, Chairperson, Fiscal Affairs Committee of Indirect Taxes, BCC&I, for inviting the Directorate of Commercial Taxes West Bengal to address GST assessment and scrutinies and departmental perspectives and expectation of department on such scrutiny. I'm sorry to say that our commissioner is occupied from some urgent needs of the government of West Bengal. So on behalf of our directorate, I am addressing the topics. I will take approximately, I think, 10 minutes to complete the topics. There is a short presentation with 4 slides. If you allow to share, then I can share that.
Yes,
Please,
sir,
sir.
I'm giving you the co-host right.
I want to mention here that the point which are narrated by our respected Ashish Chandan sir, in that state perspective also almost in the similar manner, because our SOP on scrutiny also almost a replica of the central scrutiny SOP on scrutiny. And yes, thank you very much. Just a minute, please hold on. I'm just sharing this. Yes, our scrutiny is basically, it's a very simple flow chart is there. There are precisely these 5 stages are there. First, our information system division. They are selecting taxpayer under the state jurisdiction for scrutiny of return based on the selection parameter fixed by the expert committee, that is the selection committee formed by the commissioner of the state tax. After that selection, that is basically allotted and distributed to the jurisdictional proper officer by the charge officer and by the additional commissioner in case of a large taxpayer unit. After getting that allotment of this taxpayer under a particular jurisdiction, the proper officers, they issue SMT 10 through GST portal on the basis of quantifiable discrepancies found on scrutiny on returns and other information available before us. And in the 4th stage, basically it's the part of the taxpayer. It is desired that the taxpayer should submit their reply in SMT 11 and make payment in DRC 03 if the discrepancy is accepted partly or fully. After examining the reply, final decision will be taken by the proper officer, and closure of the scrutiny will be made if in two occasions, if the full payment is made, and in that case, DRC 04 will be issued and also SMT 12 will be issued. In case of no, if the reply is satisfied by the proper officer, in that case also SMT 12 will be issued and the scrutiny process will be concluded. Otherwise, in case of any dispute still exists, initiation of demand and recovery proceeding will be initiated in most of the cases by the same officer in DRC 01. So basically, if the taxpayer will get other opportunity and personal hearing in case of any discrepancy still exist after scrutiny in demand recovery state, that is in the proceedings when it is started with the issue of DRC 01. And next is that there are basically in West Bengal 5 parameters of scrutiny are taken for the period from July 17 to March 18. And those 5 parameters are first is that short payment of output tax liability in GSTR 3B compared to tax liability as per GSTR 1 or GSTR 9 or 9C. Second is that tax short paid for supplies attracting reverse charge. Third is excess claim of ITC in GSTR 3B. Fourth is commensurate reversal of ITC has not been done in respect of exempt supply. And if there is any demand of interest is due from the taxpayer, in these 5 situations only, taking these 5 parameters, the SMT 10 are being issued in the state of West Bengal for the taxpayer and the state jurisdiction. And departmental perspective is that scrutiny on the basis of bare minimum parameters, where basically a substantial difference of taxes are exist, only for that also scrutiny is conducted. System-based selection with risk parameter, if the total selection is system-based as far as the central authority for that principal chief commissioner have told. In here also it is basically system-based selection. And second is that the scrutiny of only 11,000 taxpayer for 17-18 is under process. Out of more than 4 lakhs, that is precisely 4,15,000 registered taxpayer under the state jurisdiction. It is almost only 3% of the returns are targeted to be scrutinized. Third is that notice in SMT 10 will be issued through system only. In case of any confusion, can contract a proper officer through system or email or telephone. Reply is expected in SMT 11. Minimum physical interface is there in case of the process of scrutiny. In case of any technical glitch is faced in the system by the taxpayer, he can contact the that proper officer and he can submit that reply in SMT 11 through email also. That is also accepted. And also if he is not in a position to submit that and further time is required, in that case he can request the taxpayer through email, and in that case a very short period of time may be allowed, but it is all the taxpayers are requested that please don't request unnecessarily request the time. Try to give your reply within due time. And if you are not able to reply properly, in that case, the further opportunity is there, because it is not any demand notice or any show-cause notice. The show-cause notice will be issued in DRC 01. In that case, the personal hearing can be taken, and the taxpayer will get further opportunity to address his discrepancies. In reply, the SMT 11 is not accepted by the proper officer. Further opportunity along with personal hearing will be allowed, that I've already told. So there is basically further opportunity, and to minimize the repetition of works, in most of the cases, the same proper officer will adjudicate. So in that case, I think there will be a bare minimum of repetition of works, and it will be beneficial to the taxpayers. And expectation in respect of scrutiny is firstly that the taxpayer should reply properly to avoid unnecessary creation of demand of tax. And please reply with supporting document. Otherwise, in many cases, it's not possible for the proper officer to accept the reply. Voluntary payment on the point of acceptance will be appreciated. And one point I want to mention over here, if you find that your document is voluminous, that cannot be uploaded to the system, in that case, you are free to submit that through your the email address provided by the officer, and that will be accepted. Voluntary payment on the point of acceptance will be always appreciated. And don't hesitate to contact the proper officer in case of any clarity is needed in respect of ASMT 10. And most of the ASMT 10 is accompanied with annexures, which will be helpful to the officers to address his problems. Please pay interest in case of any admission of tax dues. We found that in many cases, the taxpayers are admitting the tax dues. And even in GSTN 9 and 9C, they have admitted the further dues, but they have not paid the interest. In this case, our request is that please pay interest in case of any admission of tax dues. But in case of any payment for wrong availment of ITC or non-reversal of ITC, in that case, you please pay the interest for as per the new provisions of subsection 3 of section 50 on the availed and utilized ITC portion only, not on the whole admissible portion of your ITC. Department is clearly want to say that department is against raising any unjust demand. We are truly against the creating a paper demand. So cooperate the process of scrutiny to the proper officer to minimize the demand of tax. This is the basically expectation to the taxpayer. And this is the end of my small slide for these topics. Thank you very much. Thank you, BCCI again.
Sir,
Thank you, sir.
questions.
Yes.
Yeah, Sharbari,
We have one question in the, yes, we have one question in the chat box also.
Yes,
in the chat box.
Yes.
So, sir, one question is that can ASMT 10 and ADT 1 be issued for the same financial year?
No. We have that there. If there is any situation like this, please contact to us to the for Information System Division, to the Special Commissioner of Information System Division, and I think there is no chance to be repetition of this same thing, which is that already audited or audit notice for audit has been issued by the state authorities. There is no scope of again scrutinize that return.
Okay, sir. Another is what is the last date for or time limit for issuing ASMT 12?
For issuing ASMT 12, actually there is a circular that is in not the circular, departmental circular has been published by our commissioner. As per that circular, within the receipt of SMT 11, the reply of the taxpayer within 1 month, not 1 month, within 30 working days, within 30 working days of receipt of that reply by the taxpayer, the ASMT 12 will be issued in case of if the all the disputes are resolved. And if all the disputes are not resolved, in that case, within the 13 working days, DRC 01 will be issued for the remaining part of that discrepancies.
Okay. And sir, another thing, a little apart from this scrutiny, is what is the view of the commissionerate on inverted duty refund for works contract? Because there seemed to be a little confusion. There is a notification for construction services, inverted duty refund is not allowed, but not for works contract.
Pardon?
Sir, inverted duty refund for works contract services.
Yes.
the view of the commissioner, because certain charge officers, they are, referring to notification which debars inverted duty refund for construction services. But that is because construction was, the rate was different. But for works contract, there should not be any bar on the inverted duty.
I think for was contract, there should not be any bar. Because if we concentrate on the inverted duty structure, the provision is very clear where the output tax payable tax payable on output supplies is less than the tax suffer on inputs. So basically, it covers output supplies both the service and the goods, but the input should be restricted on the inputs only, that is the goods only, excepting the capital goods and the service part. So there is no such bar over there. And also taxpayers are applying for the same in our jurisdiction. In the last taxpayer unit also, the taxpayers are applying, the was contractor, they are applying where there is a inverted duty structure.
Right, sir. Sir, one last question. Mr. Santu Bhattacharya has asked, after ADT 1, para approved and settled form is the final document for closure of audit. I think what he wants to say is that if the audit para is issued and you pay off, then is that the conclusion of the audit?
Yes, if after getting the ADT 02, if the auditee thinks that the amount is payable and he paid the amount, so in that case, within 1 month, he will pay the taxes, because within 1 month will not initiate any proceedings under section 73. So within 1 month, if the amount is paid by the auditee, in that case, the intimation will be given to the taxpayer. In such case, the DRC 04 will be issued through, and they will get the DRC 04 through the audit menu over there in the front-end portal of the taxpayer, and that will be issued from the back-end portal of the GST system by the tax officials, and that will be treated as the closure.
Right, sir.
There is no prescribed form to intimate the taxpayer in respect of this closure. That is correct. But still, if the taxpayer if he wants that any closure intimation is needed from the tax official, that can be done. Yes.
Oh, sir, so a request letter can be given to the tax official?
Yes. There is no harm, because if it is accepted all the queries by the tax officials, and the officers should be fair enough to issue such confirmation to him. Even there is no such specified format in the rules or in the system. There is no such.
Thank you, sir. This is a very welcome clarification given by you.
Thank you very much. Thank you to all.
Thank you, sir, for joining us today. We now welcome Mr. S.K. Panda, ex-member of Central Board of Indirect Taxes and Customs and Special Secretary to the Government of India, to our webinar. I request sir to please deliberate on GST past, present, and forward CBIC and Ministry's expectation from the taxpayers.
Hello, everybody. Mr. Jalan and all participants and members of the Bengal Chamber of Commerce. Am I audible? Hello?
Yes, sir, you're audible.
Yes, sir, you're audible.
Sir, you have gone on mute. Kindly unmute. Suddenly it has gone on mute.
So, is it audible now?
Now it is audible.
So, starting with, it has been a very difficult journey for the GST. When it started, at that time, if any of the members and participants must have heard my talk when I was Chief Commissioner there, when the GST was coming, our expectations. And after that, I joined the board when the policy making was there, and also I was in charge of IT. So we know how difficult it was to implement the IT and make the platform GST compliant. But anyway, after a lapse of 5 years now, I come to understand that things have stabilized. At least the filing of GSTR 1, GSTR 3, etc. are going smoothly, and everything is getting reflected in the GSTR 2A, 2B. Of course, some of the non-compliant who are not still filing the returns, the credits are not getting reflected, so problems are still there. But in any case, things have stabilized, and there is no problem in the IT front, which is the backbone of the GST, and return filing, taking of credit. All these things are going smoothly. And now revenues are growing. Earlier, it was less than 1 lakh crore. Now it has grown. It is something 1 lakh 50 crore it is reaching per month. And now we are having around 14 million taxpayers. So things are improving. We are getting good revenue. Everybody is appearing to be compliant and taking registration, filing returns. Now, anyway, this session of yours is mostly on the scrutiny, assessment, and audit matters. Most important thing I will advise from my experience is that it is payment of proper duty and taking of the proper credit. These are the two things around which the audit and scrutiny, everything assessment revolves. You have paid the duty correctly and taken credit correctly. Sometimes the credits knowingly taken wrongly, and sometimes by mistake taken something. So one has to be very sure that they are taking credit correctly, so that in audit and all, you are not facing the problem. And whether it is anti-evasion perspective or audit perspective, the department will see that credits are not taken wrongly. And similarly, a duty has been paid. That is how things should move. And I don't think any problem is being faced presently by the assessees. And I will expect that this deliberation which you are making from the chamber side, you should also give some thought and importance to the present changes or clarification which the government has brought out, so that if you are finding any difficulty in those things, you should discuss and take it to the notice of the government. Like the present most talked about topic is the forged invoice, and on which the government has brought out some circulars where they have told, basically that they have told that person who has issued the invoice, he will be only given penalty, and person who have used the credit, they will pay the duty. This is the crux of the whole circular. This requires a lot of deliberation, and everywhere the chambers, whether it is North India or South India, they are little agitated, industry is little agitated, because sometimes what happens, the main user of the credit may not be knowing that he has those are the bogus credit. And moreover, how do you know which this is a bogus and invoice or bogus credit? How do you know that the unit is a bogus entity? How do you know it is a fake invoice when these are removed and the invoice has traveled 3 or 4 levels? So you should deliberate on those things, and whatever your suggestions, you should also forward to the government. At least what I feel that in this circular, we should also try to clarify how does a industry come to know, and what are the precautions he should take, so that he is safe. And what is the definition of the bogus entity or something like that? It's a very crucial thing. Because till now, whatever Supreme Court, High Court decisions and all, it has been always telling that the ultimate user, if you have paid everything correctly and it's a bona fide transaction, goods have come, invoice has come, you may not be responsible. But after this circular, it has opened a Pandora box. And maybe you unknowingly you have got some invoice and you will be penalized. So the chamber should deliberate on those things, and whatever your suggestions, you should also send to the government so that things are also taken care of. And the other important thing is the recent Supreme Court decision by which they have opened for taking credit, which were long pending, this trans 1, trans 2 credit. During those times, I still remember, and particularly this was a big problem in Eastern India. Internets were not working, and there were a lot of technical glitches. Actually, the people, our industry, they were not able to access the GSTN network and not able to file all these transfer trust. But anyway, I was here I have seen these problems. But when I went to the ministry and I was in charge of this in IT, I knew these are the problems in the field, but we could not help it because as per our parameter, we have to see that the concerned unit should have accessed the GSTN, and there should be indication in the GSTN portal. Yes, you have tried to enter the GSTN portal. We didn't find anything, so it was not easy for us to, even if we knew that the industry was entitled for this, we could not do help it. And I am so happy that now Supreme Court, everything has gone to the Supreme Court, and now Supreme Court has given the direction, and GST Council has agreed, department has agreed, and it is now portal is open for the 60 days, and next 90 days, government all the field permissions will take the decisions and give you the refunds. So all these issues, I don't think there will be any further problem in this also. And if you are expecting any problem, you discuss with your field officers, and they will give you a hearing, and most probably things will be taken care of, and all of you who have missed the tax credit, all of you will get it. The other important thing will be this whatever is pre-packaged and labeled commodity clarification which has come. All this earlier it was branded goods, payment of duty on branded goods and all. Now this has been replaced. What we have seen, I have seen myself in the board when the representation were coming. You see, the duty was only on the branded goods. Branded goods means those who are having the owner of the branded products having the right of that. Lot of things we have seen. The brand name will be little adjusted, and then the owner will say, no, this is not my brand, and things will be sold in the market, and people will be purchasing that, knowing that this is the same product. But the owner of the branded goods will say, no, this is not mine, because my spelling is this, the other spelling is different. My figure is this. There's so many disputes. Now that is how this has been taken away, and now it is pre-packaged and labeled commodity. And a lot of clarification has been given in the circular. How below 25 kg kg and liters, they will be charged to duty, and above that it will not. And they have also told how wholesale pack duty will not be there. So please go through those circulars also carefully, and also deliberate in the chamber. What I will suggest and request chamber, that in addition to the present problem, scrutiny problem, all those things which are going on, these are routine problems. This will be there, and you can always discuss on that. But also deliberate something on the policy, which are coming and issues, so that what happens, you should give your suggestion. What I have seen that there are never any suggestions on these policy matters from the Eastern zone. Always it is the northern zone or the south zone taking the lead. So that is how you will see your problems which are in the Eastern India and Eastern zone are never addressed to. So please deliberate on those things. I will not take much time. And please discuss about your scrutiny problem, whatever you are facing. These are routine problems. Officers are there who will take care of this. In addition to that, Jalan, my request will be that please discuss something on the policy and some of the issues which I have highlighted, and come out with a paper and forward it to the ministry, so that they are aware that how you are, because Bengal Chamber of Commerce is a old organization, and sitting in Delhi, everybody waits for the what is happening in Eastern India. And if nothing is going on, everybody will feel everything is going smoothly. So please, whatever problem you are facing, highlight those things and make a policy paper and forward it. And lastly, I will say that something you were raising about the dean. Now, Supreme Court has again given a direction 2 days before that even the state government, state GST also, they have to put the DIN number. And the instruction will go, I think, from the government, it is going to the chief secretary of all the states. Their correspondence also, they have to carry the DIN number. Without DIN number, this will not be a legal documents. So anyway, I just told because 2 days before Supreme Court has told these things. So anyway, thank you for inviting me, and I am happy to be participant to all those things. And if you come out with a policy paper, please forward it to me so that I can at least know what are the issues. And when I talk to people in Delhi, I can just also tell them what are the problems. Thanks, Jalan. Thank you all.
Thank you, sir. And a very, very important point which you have made, other than the routine scrutiny issues, is the discussion and the involvement of Bengal Chamber more in the policy issues. And many of our members keep on having the policy issues, rate issues, where certain and other issues which require a policy change. And we are lucky to have you with us from the Eastern region. And certainly we will take this suggestion forward and write to our members. The participants here are all from various reputed companies in Eastern region. In case you have any such issues, sir is there, and we from the Fiscal Affairs Committee from the Bengal Chamber would be available to take up these issues through sir in Delhi if required. Thank you very much, sir.
Thanks.
Thank you, sir. I now request Mr. Jalati Roy, Head Indirect Taxation from DIC India Limited, to please address on handling GST departmental audit and scrutinies from the industry perspective.
Hello.
There are a few, just Mr. Roy, just an announcement. There are a few questions on the chat box. Please keep typing. We will take all the questions after Mr. Roy's deliberations and after I touch on few important issues. Mr. Roy.
And I would, and just for 2 minutes, I would also like to thank the Principal Chief Commissioner from Chandigarh, who Madam has joined from Chandigarh to our session. And thank you, the Chief Commissioner's Office from Chandigarh, for joining us today. Over to you, sir, Mr. Roy.
Thank you, Madam. Thanks for joining. Over to you, Mr. Roy.
Hello and good evening to all the distinguished speakers, guests, both from the department as well as from the industry. And also thanks to Bengal Chamber of Commerce and Industries and particularly to Mr. Jalan, Chairperson, Fiscal Affairs Committee, for providing me the opportunity to speak in this August forum. I am Jaladi Roy. I am heading the Indirect Tax Department of DIC India Limited. DIC is a multinational company engaged in manufacturing of printing ink, adhesives and allied products, having GST registration in 8 states. Today, I think there are very few companies left pan-India wise that have not yet received any audit notice for audit of the books of accounts as per section 65 of the CGST Act 70. In my brief lecture today, I will address mainly on the effective handling of GST departmental audit, the documents and records that are to be kept ready for audit. I will also touch upon the experience we had in the GST audit till date, because some of our locations have already completed. The difficulties faced there, as well as the possible remedies. Regarding after after receipt of audit notice, I think we should keep the following documents ready. Number one is trading account for the period of audit along with the trial balance, the updated cash book, bank book for the relevant period, as well as the bank reconciliation statement, details of sales, updated sales register, tax invoice, bill of supply, delivery challan, credit note, debit note, etc. for the relevant period. Details of credit note issued to customers, especially details of commercial credit notes, because all of you know, department is more interested where GST has not been charged. So in these delivery challans and credit notes, commercial credit notes, we do not normally charge GST. So therefore, that detail should be there in order to substantiate in the audit that this really do not attract GST. Again, the bill to ship to transaction should be maintained separately. There should be proper maintenance of the stock register, item-wise inventory report, closing stock period-wise. I'll then come to gate register. Gate register, I have seen in many companies, I have been in other companies also working previously, are not properly maintained, because mostly these are maintained by the security personnel. So this gate register should be properly maintained with all the inward and outward goods for the period, should be properly registered in the gate register. The purchase invoices for the period, purchase register for the relevant period, party ledgers for the period. If there is any rejected or dead stock for the relevant audit period, details of Tran 1 and Tran 2. In case of reverse charge payments, there should be the details should be maintained regarding the reverse charge payment. GSTR 9 and 9C. In many companies, in fact, we have experienced in our company itself, our GST liability, we pay 90% by utilizing input tax credit. And only 10% of the liability is being paid by cash, other than the RCM. Now, obviously, department will come into it and ask question about the excess payment of, short payment of cash and utilization of ITC to such a large extent. So therefore, I think these substantiation should be there. The reason why we have to pay through ITC, we are paying through ITC, and everything is as per law. There is no evasion or non-payment of cash intentionally. Similarly, if your company is having import-export, all the relevant registers for import or export are to be kept properly. Relevant document like receipt vouchers, payment vouchers, refund vouchers, etc. should be properly preserved. Advances received, paid, and adjustment made. Also, from the transporters who are in transport business, any person from the transporter's point of view, as per Rule 56(17), any person having custody over the goods in the capacity of a carrier or a clearing or forwarding agent for delivery or dispatch thereof to a recipient on behalf of any registered person are supposed to maintain true and correct records in respect of such goods handled by him on behalf of such registered person, and shall produce the details thereof as and when required by the proper officer. This has to be kept in mind. Other points of attention regarding this audit can be summarized as to keep the documents, whatever I mentioned, at each branch and each place of business. For instance, in our company, not all, out of the 8 registrations, in 5 registrations, we are having 3 or 4 places of business per state. So therefore, these documents as mentioned above should be readily kept at each branch and place of business. If there is any such, I will advise you not to sign any statement without under coercion of the auditors. Be sure what you are signing. If needed, you take time, but never sign where you are not yourself confident. Sign the written statement only when you are fully convinced. Also, whatever trade you are in, I'll request you to keep track of all the advance rulings regarding your trade across the country, which may have an impact on you. Waybill reconciliation. Waybill reconciliation, already we have received letters from the department regarding difference in waybill, as well as with the GSTR1 return. So therefore, waybill reconciliation is a very, very important issue where every month we should reconcile and point out wherever the difference, the reason of such difference. Coming to audit trail, as per Rule 56 sub Rule 8, wherever any entry in register, accounts or documents required to be changed, now please do not erase or efface or overwrite these. Any incorrect entries should be scored out under attestation, and thereafter the correct entry should be recorded, and where the registers and other documents are maintained electronically, a log of every entry edited or deleted should be maintained. Nowadays, auditors often ask access to your system. Now, wherever view access can be given to the officers, that can also be arranged. Also, you should ensure that, as I told previously, all the places of registrations under, in a particular state should be in your registration certificate. If I have 4 places, all the places should be included in the registration certificate. If any taxable goods are found to be stored in any other place other than those declared, without the cover of any valid document, the audit officer shall determine the tax amount payable on such goods if such goods have been supplied by a registered person. For manufacturers, previously we were preparing RG registers. I think that should also be continued. Monthly production accounts showing quantitative details of raw materials or services used in the manufacture and quantitative details of the goods so manufactured, including the waste and product byproduct thereof. For service providers also same. Quantitative details of goods used in the provision of services, details of input services utilized and the services supplied should be properly maintained in the register. In case of works contractor, the name and address of the person on whose behalf the work contract is being executed, description, value, quantity, wherever applicable, of goods and services received for the execution of such works contract, description, value, and quantity of goods utilized in the execution of works contract, the details of payment received in respect of each works contract, name and address of suppliers should all be properly maintained. For the transporters, goods transported, delivered, and goods stored in transit by him, along with the GSTN of the registered consignor and consignee for each of his branches, should be properly maintained. In case of warehouse owner, books of accounts with respect to the period for which particular goods remain in the warehouse, including the particular relating to dispatch, movement, receipt, and disposal of such goods. Store the goods in such manner that they can be identified item-wise and owner-wise, because you might be storing goods for more than one, definitely more than one, multiple manufacturer, which shall facilitate in physical verification or inspection by the proper officer on demand. Coming to TRAN 1 verification, TRAN 1 copy which has been filed in the GST portal should be there. The first pages of year 1, year 2 or year 3 as applicable for the period of January 17 to May 17 and complete return for the month of June 17. I mean pre-GST period. If credits other than closing balances of year 1, year 2, year 3 has been transitioned, copies of such documents based on which credit has been taken must also be provided to the TRAN 1 auditors. Details of balance credit of education cess, higher education cess, Krishi Kalyan cess, Swachh Bharat cess, which have been carried forward in GST TRAN 1 should be preserved. Auditor will definitely ask you about the pre-GST period, at least from 1st July 16 to 36/17. Therefore, month-wise details for this period, pre-GST period, abstract of Senvat credit availed, utilized on capital goods, input services, Senvat credit record, register, invoice on which credit has been availed, transport documents such as GR, etc., stock statement filed with banks, financial institutions, details of Senvat credit availed on inputs after 1 year from the date of prescribed documents, which was the validity date, such as Senvatable invoice, etc., should be kept. Details of Senvat credit availed on input services, where payment of the value of input service and service tax payable as indicated in the invoice has not been made within 3 months of the date of invoice. Details of those purchases of inputs or capital goods, input services, where payment has not been made within 180 days of issue of inward purchase invoice as on 1st July 17. Credit accumulated on account of manufacture of exempted goods, if any. Credit reversed under Rule 63A-B or 63A-C of the Senvat credit rules. Details of credit of capital goods not carried forward in year 1 or year 3 but claimed as transitional credit. Inward invoices pertaining to credit, whether such capital goods have been capitalized in the books of account. All the input invoices, whether any such invoice has been issued earlier than 12 months immediately preceding the appointed day of 1st July 17. These all would be checked by the TRAN 1 auditor. Regarding job work provisions, whether we have declared the stock of input or semi-finished goods sent to job worker and lying with the job workers on the appointed date, 1st July 17. Whether the job worker has also declared the stock of inputs, semi-finished goods lying with him on the appointed day. Whether goods lying in stock with the job worker has been received in 6 months from the appointed date. All the above details, documents, information, whatever may be provided and to the auditors and readily made available. Now, regarding preparation of departmental audit, there are a few areas, I think, which is prone to risk. In order to assess the risk involved, we can look into the following aspects like net profit to turnover ratio, which means current year versus previous year vis-a-vis industry standard. Refunds generated, turnover vis-a-vis total assets ratio, loan versus vis-a-vis total assets ratio, high risk activities like real estate, restaurants, hotels, rentals, telecommunication, chemicals, etc. Exempted or non-GST supply over total supply. Cases filed by the taxpayer, legal dispute. What is the ERP system that the taxpayer is using? Because the sanctity of the system also is considered by the auditors. Who is the taxpayer GST auditor? Whether there is any high supply made without way bill, irregular returns but regular EOA bills, high turnover after enactment of GST. Now, suppose we are having a turnover of 100 crores. After enactment of GST, it became 200 crores. I'm not telling that it cannot be, but proper reasoning should be there so that there is no allegation or suspicion of duty evasion. The ratio analysis, as I was telling, input tax credit availed over total tax paid through electronic cash ledger plus input tax credit ledger. This percentage department definitely wants more to be paid from cash. If we are paying from credit, as I told earlier, we should substantiate the reason for that. Total inward supply cost divided by total outward supply value. Input tax credit availed on capital goods purchased during the year over addition to capital goods. Other income over sales. I mean, other income as a percentage of sales. Outward supply of scrap as a percentage of total outward supplies made. Value of exempted outward supply as a percentage of value of total outward supplies made. Value of zero rated supply over total supply. Non-GST supply over total supply. These ratios are checked by the department. Therefore, it is better that we ourselves be prepared for the audit prior to department coming out with any query, so that we are ready with the answer. Now, the documents normally, after the audit notice, department wants the annual report, profit and loss account, etc. In the annual report, as a precaution, it should be seen that whether there is any adverse opinion given by the auditors, whether fixed assets and inventory physical verification has been conducted and found in order. Are there any disputed tax liabilities? Because definitely these things will be questioned in the audit. Whether there are any cases booked under income tax may be examined to find out any examined to find out any implication on GST, whether GST is attracted on that or not. From the profit and loss account, completeness of income booked under PL to be treated as a supply under GST, if not the reasons thereof. While ascertaining the tax liability, one has to look not only at the credit side of PL, but debit side is also equally important, or rather more prone to frauds and errors. Reimbursement income reported as pure agents. Expenditure heads to be tested for reverse charge under section 9(3), example, foreign currency expenditures. Correlation between expenditure head and valuation of taxable supplies. Expenses and the value of, example, fuel expenses and the value of taxable surplus in the case of tour operators. Regarding balance sheet, whether there is any related party transactions for valuation. If there is any foreign related party transaction, whether services are exports or not. Fixed assets purchased vis-a-vis ITC availed. In the notes to accounts, normally we declare certain information which may be useful for the auditors. For example, inputs used for other purposes, destroyed, losses, shortage, obsolete, etc. Non-reconciliation of accounts of inputs lying with the job worker, if any. From the trial balance, recovery of charges netted off with expense as compared with last year. Also, you can scrutinize Form 26A for total income vis-a-vis 26A and income tax return. Regarding inward supplies sent out for job work, whether scrap is received back or job work price is adjusted. These questions are definitely coming from the auditors after audit will start. Now, what may be the different types of departmental interface? Assessment, number one, consisting of scrutiny for non-filers, for unregistered person, audit by authorities, special audit if required. regarding investigation. Number 3, investigation. It includes inspection, search, seizure, arrest, summon, access to premises, as well as arrest. Now, I would like to deliberate on handling inspection. All of you are aware, as per section 67, subsection 1, where the proper officer not below the rank of Joint Commissioner has reasons to believe that the SSC has suppressed any transaction relating to supply of goods or services or both, the stock of goods in hand has claimed input tax credit in excess of its entitlement, or has indulged in contravention of any of the provisions of this act or the rule made thereunder, or any person engaged in the business of transporting goods, or an owner or operator of a warehouse or a godown or at any other place is keeping goods which have escaped payment of tax, or has kept his accounts or goods in such a manner as is likely to cause evasion of tax payable under this act, he may authorize any officer, any other officer of central tax to inspect any place of business, the taxable person or the persons engaged in the business of transporting goods, or the owner or the operator of warehouse or godown or any other place. Similarly, where the proper officer not below the rank of Joint Commissioner has reasons to believe that any goods liable to confiscation or any documents or books or things which is in his opinion shall be useful for or relevant in any proceedings under this act are secreted in any place, he may authorize in writing any other officer of central tax to search and seize, or may himself search and seize such goods and documents, provided that where it is not practicable to seize such goods, such proper officer may serve the owner or the custodian of the goods an order that he shall not remove or part with or otherwise deal with the goods except with the previous permission of such officer. Provided further that the documents or books or things so seized shall be retained by such officer only for so long as may be necessary for their examination and for any inquiry or proceedings under this act. Whatever the documents has been seized, if there are certain documents which have not been relied upon for the issue of notice, should be returned by the department to such person within a period not exceeding 30 days of the issue of the said notice. The officer authorized under this section have the power to seal or break open the door of any premise, or to break open any almirah, electronic device, box, receptacle in which goods, accounts, registers, or documents of the person are suspected to be concealed, where access to such premises is denied by the SSC. The person from whose custody the documents are seized under subsection 2 shall be entitled to make copies. You can take copies thereof or take extracts therefrom in the presence of the authorized officer at such place and time as such officer may indicate in his behalf. These goods, after inspection, shall be released on a provisional basis upon execution of a bond and furnishing of a security in such manner and quantum as may be prescribed. Where any goods have been specified and been seized by a proper officer or any officer authorized by him, he shall prepare an inventory of such goods, I mean the seized goods, in such a manner as may be prescribed. Where the proper officer has reasons to believe that the person has evaded or is attempting to evade the payment of tax, he may, for reasons to be recorded in writing, seize the accounts, registers, and documents of such persons produced before him, and shall grant a receipt for the same, and shall retain the same for so long as it may be necessary. It may be necessary in connection with any proceedings under this act or the rules made thereunder for prosecution. The commissioner or an officer authorized by him may cause purchase of any goods or services or both by any person authorized by him from the business premises of any taxable person, to check the issue of tax invoices or bills of supply by such taxable person, and on return of goods so purchased by such officer, such taxable person or any person in charge of the business premises shall refund the amount paid towards the purchase of goods after cancelling any tax invoice or bill of supply. regarding bond and security for release of seized goods as per Rule 140. Seized goods may be released on a provisional basis upon execution of a bond, as I told, in form GST INS 04 and furnishing of a security in the form of bank guarantee equivalent to the amount of applicable tax, interest, and penalty. In case the person to whom the goods were released provisionally fails to produce the goods at the appointed date and place indicated by the proper officer, the security shall be encashed and adjusted against the tax, interest, and penalty and fine, if any, payable in respect of such goods. Rule 41 deals with the procedure in respect of seized goods, where the goods or things seized are of perishable or hazardous nature, and if the taxable person pays an amount equivalent to the market price of such goods or things, or the amount of tax, interest, and penalty that is or may become payable by the taxable person, whichever is lower, such goods, as the case may be, things shall be released forthwith by an order in form GST INS 05 on proof of payment. Where the taxable person fails to pay the amount referred to in Subrule 1, the respect of the said goods or things, in respect of the said goods or things, the officer may dispose of such goods or things, and the amount realized thereby shall be adjusted against the tax, interest, or penalty, or any other amount payable in respect of such goods or things. Now let me discuss about the teething problems of GST that we are facing till now. As I told, in few of our locations in a few states, we have already experienced this GST audit. Let me point out a few points from these audits wherever we faced difficulties. For example, department is often, definitely all of you have faced this, department is often asking for reconciliation of ITC between auto-populated GST at 2B and ITC taken as per GST at 3B, which ideally includes RCM and imports also. Now the department should make necessary arrangements that the imports are also automatically and correctly uploaded in the GST portal. You will find our bitter experience is that, definitely you have also seen, it is often seen that providing either it provides nothing or provides incorrect import related IGST credits. Now we avail the ITC of the IGST paid as per the bill of entry issued by the customs, which is a valid credit taking document. Similarly, for RCM payments, we avail ITC of the GST paid under RCM after such payment in our books. But ideally, very few vendors upload the RCM data in their return. Now, due to this mismatch, it results in exchange of letters. Just 1 minute. Hello. Take it. I mean, take it. No. So whatever I was telling, due to this mismatch, it results in exchange of letters, reconciliations, issuage of SCN, which is entirely unwarranted. Secondly, filing of return for suppliers with late fees or applicable interest is legally allowed, but the recipient is restricted to avail the ITC after a certain period of time, i.e. November in respect of the last financial year. We have faced this problem that many of our vendors file late return even after November of the next financial year and pay interest, but that date of credit taken at the recipient end, I mean our end, it is not extended. This implies that a government has got the tax along with the interest, but credit at the recipient's end is not available due to expiry of the validity period of taking credit. This problem should be addressed by the department since the recipients are denied of the legitimate credit. Thirdly, often the department wants reconciliation with certain figures of ITC sent from their end with that of our ITC availed as per GST at 3B. Presently, data for a particular month can only be downloaded from the portal. For downloading data for only for a particular month, it can be downloaded. That means for downloading data for a year, we have to download GST at 2B 12 times for 12 months. Now, GST portal should allow multi-month downloading facility of GST at 3B. In view of the above problem, many of the assessees have to go for purchase of software packages from various ASP, GSPs. As using these packages, you can easily download for any n number of months or year at one shot. Lastly, I'd like to say that many times, instead of in the audit, we have seen that the vendors, instead of uploading in B2B, they are uploading inadvertently in B2C category. This is mostly found in case of small vendors who are not fully aware of the legal implications. Since the ITC amount is not showing in their GSTN, in our GSTN, the auditors tend to disallow the legitimate credit for mistake in uploading at the supplier's end, even after showing them the legitimate purchase invoice and proof of payment. So basically, these were the points we had faced in our GST audit recently. With this, I conclude my deliberation for today and hand over to Mr. Jalan.
Thank you, Mr. Roy, for joining us today. I now request our chairperson, Mr. Vivek Jalan, to take the last session forward on handling departmental audit and scrutinies with practical examples, the recent amendments in GST, and also the critical issues and notifications. We can't hear you, sir. No, we can't hear you. No, there is some audio problem. We can't hear you. We can't hear you.
Hello.
Yeah, we can hear you now.
Okay. It's clear, no?
Yeah, it's clear. Not audible.
Hello. Yes, sir. Hello. Audible.
Yes, you are audible now.
Okay. I don't know. It's the same. Anyways, so please tell me in case there is some issue in the sound.
Okay.
So thank you. Thanks, Mr. Roy and Sharbani, since this is the fag end of the session and still there are some around 20-25 minutes for our session to end. So I will take you all across two sects in GST, two sections. First section is the burning issues. I will discuss around 10 burning issues which we all in the trade and industry need to prepare ourselves and need to have our documentation and other details ready. Mr. Roy has already discussed a lot of them, but I will discuss only the very, very critical issues which are burning topics across the country. And the second, which is the most critical issue today, that is filing of GSTR 3B after this circular 170 has been issued detailing the guidelines for filing the GST R3B. So first, the burning issues, and many of the speakers have also deliberated on that. I will just tell you the issues and the our views on the aspects. First, very recently we had an interaction with the Honorable Chief Commissioner in the Calcutta Commissionerate, and we got to understand that the e-invoicing compliance is very, very low. It is only 40%. That is, those suppliers who are required to give you e-invoice, only 4 out of 10 are giving you an e-invoice. Other 6 may not be giving you an e-invoice, although they are mandatorily required to give you an e-invoice. Now, in such case, as per Rule 48, Sub Rule 5, it is under Section 16, Subsection 2, you would not have a valid tax invoice and hence your input tax credit as a recipient may be denied. Therefore, it is important now that from 1st October, the e-invoicing threshold is also getting reduced to 10 crore rupees. It is important that you check for all your suppliers who are not giving you e-invoice, whether they are registered on the IRP or not. In case they are registered on the IRP portal but not giving you an e-invoice, then your input tax credit can be denied, and hence you must insist on the suppliers to give you an e-invoice, and only after that the corresponding GST payment should be released. Next, again, where you are not getting an e-invoice, where you're getting an e-invoice, or even when you're getting an e-invoice, ensure that your e-invoices or other invoices from the suppliers are either digitally signed if you record it in soft copy, or you have the hard copy of those invoices, right? Just a second. So in case you do not have a digitally signed invoice, then, and if you also do not have a ink signed hard copy of the invoice, your input tax credit may be denied by the department in absence of the original tax invoice. Next, very, very burning issue, even Mr. Panda was discussing this on fake invoice. Friends, and this circular 171 on fake invoices, which has been issued, just a second. Why are you all shouting? Yeah. So this circular 171, which has been issued on fake invoice, it says that the recipient of fake invoices, right, where tax has not been paid at any level to the government, right, that recipient would be liable for a penalty penalty under which section? Section 122 subsection 1 capital A, right? Please go through this 122 1 capital A, which has been inserted in the GST law after few years of the applicability of GST law. So this 122 1A, it says that the recipient of goods or services who is the final beneficiary of the goods or services, right? So a recipient of goods or services who is the final beneficiary of the goods or services, and on whose instance this transaction of fake invoice has been done, he shall be liable for a penalty of the tax amount or other penalties under 122 1 capital A. Also, there are the corresponding 122 section is for penalties and 132 is for punishments, prosecutions, etc., etc., bailable, cognizable, non-bailable, non-cognizable, etc. Right? So 122 and 132 has to be read simultaneously. Friends, in our view, now this proving that you are the final beneficiary, let us understand this. Say any person in the chain, you purchase from a supplier, your supplier has filed his GSTR 3B, he has filed his GSTR 1, you have got the input tax credit in your GSTR 2B, and you have the way bill if it is a goods. Your supplier is in existence at his place of business. Your supplier is not insolvent or has not closed down his business. So these are the few things which you have a machinery to check. However, if your supplier receives the goods or services from another supplier who is non-existent or who has not paid the tax to the government, then in our view, as per the Honorable Apex Court's judgment in the case of Arise India Limited, this is an impossible performance for you to check whether your supplier has defaulted in the GST payment or has committed certain non-compliances as far as GST is concerned, until and unless you are proved under 122 1A that you are the mastermind of the transaction. The transaction has happened on your instance, then even though you are the final beneficiary of the invoice, in our view, you as a bona fide recipient should not be leviable to penalties, right? Now, another burning issue is many states are not taking cognizance of this. The issue is, if now before 1st of January 2022, that is up till 31st of December 2021, GSTR 2A was just a facilitation tool. The input tax credit could be taken on the basis of your purchase register or your books of accounts. Subject to, of course, Rule 36, Sub Rule 4, 5%, 10% or 20% more ITC you could take. But even that was vis-a-vis GSTR 2A. Say in a situation where your supplier has filed GSTR 1 incorrectly, he has shown B2B as B2C, not appearing in your 2A, but tax has been paid by the supplier and which can be proved. In our view, this input tax credit should not be denied to you as per the Honorable Apex Court's judgment under Bharti Airtel in Bharti Airtel's case. While the judgment was on another topic, whether GSTR 3B could be revised at a back date or not, but it made and answered a very cardinal question, that input tax credit till 31st of December 2021 could be taken on the basis of your books of accounts if you are compliant with section 16 subsection 2. So in our view, in case you can prove that your supplier has filed his GSTR 1 correctly, and even the Maharashtra state has issued a circular to this aspect, if your supplier gives you a declaration that he has paid the GST and has filed your 3B1 return with your invoice, then this ITC cannot be denied to you. Next is ab initio cancellation. You purchase the goods from your suppliers or vendors, and you see that their GST registrations themselves have been cancelled by the department. Can your input tax credit be denied? Well, in a beautiful judgment by the Honorable Calcutta High Court in the case of LGW Industries, and reiterated by the same High Court in the case of Sanchita Kundu, a principle has been laid down. And please listen to this very carefully. In all ab initio cases cancellation, this is a beautiful principle which has been laid down by the Honorable High Court. You have to see your date of purchase of goods or services. Say you purchase the goods or services on 28th of, say 28th of July 2022. And when you take the input tax credit in August, you see that the supplier's GSTIN has been cancelled. But that has been cancelled on 10th of August 2022 with retrospective effect from 1st of July 2017. The Honorable High Court has said, if you have purchased the goods or services before the date of cancellation, in the instant case, you have purchased the goods or services on 28th of July 2022, and the registration has been cancelled on 10th of August 2022. In this case, your input tax credit cannot be denied, as on the date of the purchase, the supplier's GSTIN was active and there was no machinery with you to check whether it would be cancelled going forward or not. If you have purchased after the date of the cancellation of the GSTIN of the supplier, then no chance the input tax credit could be denied to you. However, in case of mismatch, as per the Honorable Madras High Court's decision in the case of DY Bethel Enterprises, input tax credit, and that High Court's decision was based on the press release by the CBIC in May 2018. Only in case the supplier is missing, he has closed down his business, or he goes insolvent, only then your input tax credit can be denied to you. However, if you can prove to the commissionerate that the supplier is in existence, your supplier is still doing business from his place of business, then in our view, as per the press release of the CBIC in May 2018, and as per the Honorable High Court of Madras's judgment in the case of DY Bethel Enterprises, the corresponding input tax credit should not be denied to you. So these are the important burning issues in the GST as of now. There are a few other issues. Okay, let us take one or two more issues which you should check. Number one is the bill to ship to cases, right? In bill to ship to cases, generally it is the allegation of the department that the person who has shipped to you, right? Say for example, your supplier is in Noida, your supplier is in Chhattisgarh, you are located in West Bengal. The supplier from Noida bills to you and ships to you. The supplier from Chhattisgarh bills to Noida and ships to you in West Bengal. The question is, if your supplier has done a non-compliance, could ITC be denied to you? I have already deliberated on that it cannot be denied to you because there is no machinery with you to check your supplier compliance of GST. However, it is our recommendation, in case possible, it is also important in bill to ship to cases specifically to know your supplier who is shipping you, because the allegation of the department is that this your supplier's invoice to you is just a paper transaction to route the invoice through your supplier. However, your supplier is the main supplier in this case. So while it may or may not stand the judicial review, yet to prevent departmental harassment in these cases, because fake invoices cases are really under the scrutiny of the department and are not taken as business as usual. It is important, in case possible, please do know your parties who are shipping to you, though billing to your supplier. Last is the ISD distribution or cross charge. Friends, many a times we see that many large companies also cross charge instead of distributing through ISD. For example, your statutory auditor's bill is taken in the HO and distributed wide cross charge to the other branches, and ISD registration is not used in this case. While the distributing state may not have a problem, but the recipient states may have a problem in this, because the allegation would be that the supply, even though wide cross charge, is not consistent, as your supplier of services is not the GST auditor. Since supply is irregular, therefore input tax credit has a chance of being disallowed. We have faced this in various states in India, and hence it is always advisable to follow the process of law, follow input service distribution mechanism under GST. Even when you have a reverse charge invoice, say for example, you are paying a royalty to your mother company and you are paying reverse charge. From input service distributors registration, you cannot pay reverse charge. So you pay it through your normal registration. However, from your normal registration, please bill it to your ISD registration, and from the ISD registration, please distribute the input tax credit corresponding to other states. This is very, very important. Under Rule 54(1) capital A also it envisages this from January 2018. How many a times it is seen that in the interest of, under the shelter of revenue neutrality, just a procedural issue, not a substantial issue, many of the taxpayers, even large companies, do skip this issue, but this might invoke departmental interest, right? So these are the various critical issues, and I would now take you through the new amendments or the circular 170, what it clarifies on the filing of the GSTR 3B return. Yeah. So this is the GSTR 3B return. Now table 3.1 on outward supplies, there is not much change out here as far as procedures are concerned. Table 3.2, supplies made to unregistered person, composition taxable person, supplies made to UIN holders. Now this table 3.2, sometimes even the large taxpayers, they skip this table while filing the GSTR 3B return. Friends, it is important now, White Circular 170, it is clarified that this table filling is mandatory, right? So this cannot be skipped. So supply is made to unregistered persons, place of supply wise, you have to disclose the value and the IGST. Now, most important aspect of 3B filing, input tax credit. I will tell you the thumb rule and then I will take you through 4 or 5 examples which will reflect upon the basic provisions and the way you should file your 3B. Many taxpayers have asked me last month, what is the due date of this change? Well, let me tell you, it is a circular. So it is issued in a way that it was always applicable, right? These procedures were always to be applied, but they are not applied. So it is applicable not from the return which you will file in August 2022, but even the return which you have filed in July 22, this was applicable, right? Certain taxpayers have asked us that oh, there is no amendment in form 3B, we are waiting for the amendment. Well, this requires no amendment in form GSTR 3B. It is a circular and thence it is just a way of filing GSTR 3B, which has been clarified. So first, thumb rule. Whatever input tax credit is appearing in your 3B, the entire amount needs to be reflected in 2B. The entire amount needs to be reflected in your GSTR 3B in table 4A. After that, you see whether it is a permanent reversal or a temporary reversal or any other disclosure is required and you disclose it. Correct? So this is the thumb rule. Whatever input tax credit is coming in GSTR 2B, you have to take it in table 4A on your screen. 4A 1, 2, 3, 4, 5. Then you see permanent reversal, temporary reversal, other disclosure, and act accordingly. Now, let us take 4 or 5 examples to understand this. Import of goods. It is appearing in your GSTR 2B. Import of goods. Take the entire amount in GSTR 3B. Okay. Now, say for example, you have imported certain goods on 31st of July, but the goods have been received on 1st of August. Therefore, you can take the credit only in August 2022, should not take the credit in July 22. However, this ITC would appear in 4A1 because you have already filed the bill of entry on 31st of July 2022. Hence, you have to disclose this entire amount in 4A1. And will you be able to take it in the next month, that is August 2022 return to be filed in September? Answer is yes. Therefore, it is a temporary reversal. So take the entire credit in 4A1 and show it as a temporary reversal in 4B2. Clear? You will ask me a question. Mr. Roy has just said that, you see, many a times this ITC of for bill of entries on import is not reflected in our GSTR 2B. What to do? Well, it is a system glitch, and our view is that since you are substantially within your rights to take the input tax credit, you can take the input tax credit even though not reflecting in your 2B, but do intimate the department that you are doing so. So if you take the input tax credit over here in 1 month, not appearing in your 2B, again it will appear in your 2B in the next month. So thumb rule, whatever is in your 2B, you have to take it here and then show it as a permanent reversal in 4B1. So first take input tax credit in 4A, then think whether it is permanent reversal, temporary reversal. Permanent reversal 4B1, temporary reversal 4B2. Clear? Import of services. Just hypothetically, your director goes to Dubai, takes the services of a restaurant, books the bill in India. You have to pay the GST on reverse charge basis. You disclose it in 4A2 and it is ineligible because it is a restaurant service. It is a permanent reversal. Once you have, it is ineligible, you cannot take it any day. And therefore you have, while you have to take it in 4A2, you have to first pay it in 3.1.D, take the credit in 4A2 and then show it as a permanent reversal in 4B1. Not only this, you have to disclose it also in 4D2, right? 4D2. Clear? I am again repeating, reverse charge, same is applicable for 4A3. Say, for example, you have taken a service of a rent a cab operator, pay it in 3.1.D under reverse charge, take the credit in 4A3, show it as a permanent reversal in 4B1 and show it as a disclosure of ineligible credit in 4D2. Clear? Any input tax credit which you have missed taking till time barring period. So as of now, the time barring for credit of 21-22 is 30th of September 2022. Maybe it would be notified, and it is certain that it should be notified because it has already been passed by Finance Act 2022. The time barring period should be extended till November 30th, 2022. However, assuming that it is still September 30th, so input tax credit which you do not avail of under the time barring period, or Mr. Roy was saying your supplier has not filed or late filed his input tax credit, which you cannot avail of now, would not be auto populated in your table 4A. So what to do? And if you take a call not to litigate that, in our view, even though your supplier has filed his invoices late, but substantial right of input tax credit cannot be denied to you. However, the department can litigate now under the new section 16(2)(BA). So assuming these time barred cases, you are not wanting to litigate, then still you have to show it as a disclosure under 4D2, because these 16(4) time barring cases would not reflect in your table 4A. Clear? Next, your employee has, you are registered in West Bengal, your employee has gone to Maharashtra, stayed in a hotel. The Maharashtra hotel charges CGST, SGST as per the place of supply rules. The CGST portion reflects in your GSTR 2B. What do? Same rule. Take the credit in 4A5. Show it as a permanent reversal in 4B1 and then disclose it in 4D2. Clear? Last example, since we are already, overshot the time, and this is the most critical example. Very few taxpayers would be doing this. Input Service Distributor, ISD. Say, I will take an example. You have two bills in ISD. One is your statutory auditor's bill and one is a cab operator's bill. Okay. So your statutory auditor's bill, you route it through ISD registration, and a cab operator's bill, who is rendering services pan India, giving you only ISD bill, that also you route it through the ISD registration. But GST auditor's bill, you can take the input tax credit. Rent a cab operators, you cannot take the input tax credit. Till now, what you were doing, you were only distributing the GST auditor's bill amount under ISD. From now, you have to distribute both, because ISD same rule. Whatever appears in your 6A, take it under 6 and distribute. So you have to make two bills, one for eligible, one for ineligible. Both the bills pop up in your 2B. You take the credit in 4A4, then show the rent a cab bill as ineligible credit under 4B1 and disclose it under 4D2. So friends, this is, I understand this is a little, complicated, but this is how the department has, clarified, and this is how the CBIC wants things to be. So it is important that we start this filing of GSTR 3B returns as per this circular 170 from this time itself for best compliance of the circular. Thank you very much. There are a few questions which I will quickly answer. Where to show pending ITC of 21-22 in GSTR 3B. Pending ITC, I understand it is under all other ITC, so you have to show it under 4A5. How to check invoices are fake or genuine? As I have said, you have to check 5 or 6 things. Number 1, whether your supplier has filed 1, whether it is appearing in your 2B, whether your supplier has filed his GSTR 3B, is your supplier existence, has your supplier not closed down his business, is your supplier's GSTIN active. More than this, you cannot do. If you have done your due diligence on these points, then you are a bona fide recipient of goods or services, the ITC cannot be denied to you. Mr. Khetawat says, how will we determine the value of perquisites for deduction under 194? I think R, when it is partly in cash or wholly cash and kind or wholly in kind. Sir, valuation, yes, it remains an issue. It has not been clarified, but you have to take some reasonable basis for the valuation, right? For example, you give a Dubai trip to your dealers, right? And you take 50% of the value from them. You have 10 dealers for whom you have spent 10 lakh rupees. You have taken 5 lakh rupees from your dealers. So the value would be 10 lakh of the benefit of perquisite per dealer. 10 lakh divided by 10 dealers, 1 lakh rupees, right? Now, GST issues, return scrutiny and audit, input and preparation points itself worth a separate session. Yes, agreed. Is clause 44 of tax audit applicable for 21-22? Yes. Very good question. In fact, I missed this point. clause 44 as well as 30 capital C, both are applicable for tax audit, coming tax audit, right? And yeah, clause 44 of this tax audit report, this is an area of concern, and I think this requires preparation by industry to implement it. How to handle trial balance issue in case of state-wise trial balance issue? Well, it is a mandatory requirement. Some taxpayers have asked me, where is it mandated? Please see section 71. So if you do not give it while scrutiny or audit, they might come and access your business premises. So trial balance is mandatory. You have to get it out of your ERP. We are doing it in all the ERPs, SAP, Navision, Oracle, etc. You have to go place of business wise and on the best estimated basis, at least as far as expense. For income, there is no part, no pressure, but for the expenses, you have to take it as per the best available data with you. But trial balance state wise mandatory in GST.
One more question is there.
What question?
At the last, some vendors billed GST invoices. Last question.
Just a minute. Some vendors billed GST invoice and filed report in B2C. How to consider the ITC? Yes. So this is what I was saying. There is a circular of the state government of Maharashtra that they are for the vendors. They have done it in B2C. Take a declaration from the vendor that they have filed it in B2C and they have paid the corresponding taxes. Your input tax credit as a recipient would be allowed. However, this has not been replicated in other states. But even if at the adjudication level it is not accepted, however, if this vendor does declare and it is a genuine input tax credit, it is our view that it should be allowed at the higher appellate level. Okay, last, I think, and department's view on a particular ITC which is not appearing in 2A, but transaction is genuine. SSE has bill and made timely payment to vendor. Will department allow this ITC? Sir, I have already just now answered it. May or may not be adjudication authorities will allow this, except in the state of Maharashtra where there is a circular to this effect. But I am sure that this input tax credit should be allowed to you as a bona fide recipient. So thank you very much for joining and a patient hearing. Thank you, Sharbani, Bengal Chamber of Commerce, all the participants for this nicely organized seminar. And over to you, Sharbani.
Thank you all for joining us today. Again, we are extremely sorry for the technical glitch at the beginning. And thank you again, once again, for joining. And thank you, Mr. Jalan and your team also for supporting us. We will hope we will be having more and more seminars and webinars with your support in the near future. Thank you all.
Thank you.